sun goes shine. Keep your heart, my friend, don't lose yourself in the morning time. The sun goes shine. Do your best, but don't lose yourself, 'cause in the morning time the sun goes shine. Have you ever seen the love in a mother's eyes when she holds her little one? And have you seen the joy in a father's pride in a son he truly loves? Wherever you go, remember, make it shine your light, reach December, never lose your soul. Whatever you do, remember, stay humble and cool your temper. Don't forget your own, 'cause in no matter the condition, you just believe in your heart and you go there alright. Don't forget, say after rainfall and after the dark, the sun goes shine. Keep your heart, my friend, don't lose yourself in the morning time. The sun goes shine. Do your best, but don't lose yourself, 'cause in the morning time the sun goes shine. Keep your heart, my friend, don't lose yourself in the morning time. The sun goes shine. Do your best, but don't lose yourself, 'cause in the morning time the sun goes shine. Your light, it will show you the road, it will lead you home. Hold on tight and learn to fight now that you're on your own. You go hard sometimes, you go fall sometimes, you won't understand. Never go, they tried, but you go there alright. You are in safe hands. In no matter the condition, believe in your heart and you go there alright. No forget, say after rainfall and after the dark. So keep your heart, my friend, don't lose yourself in the morning time. The sun goes shine. Do your best, but don't lose yourself, 'cause in the morning time the sun goes shine. Keep your heart, my friend, don't lose yourself in the morning time. The sun goes shine. Do your best, but don't lose yourself, 'cause in the morning time the sun goes shine. Oh yeah, the sun will shine. In the morning time the sun will shine. Oh yeah, oh, 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 oh. The sun will shine. It's almost breaking down here. The sun must shine. The sun will shine. Papa, he calls me to pray. He tells the Lord to watch over me. Oh, my Papa, he can't like to say as you go away, don't forget where you came. If you lose your way, you can pray. Don't be afraid, don't lose faith. You will find your help, there'll be a way. Just remember to pray and you'll be okay. miss me, son. I hope you're doing okay. Oh my papa, he today fears I go astray. 'Cause I walk a stranger land, and my home is so far away. Papa says if you lose your way, you can pray. Don't be afraid, don't lose faith. You will find your help, there'll be a way. Just remember to pray and you'll be okay. Miss F, do pray for Papa. Make him find more strength and grace. And may the good Lord keep him longer, in Jesus' name. If you lose your way, you can pray. Don't be afraid, don't lose faith. You will find your help, there'll be a way. Just remember to pray. If you lose your way, you can pray. Don't be afraid, don't lose faith. You will find your help, there'll be a way. Yeah, just remember to pray and you'll be okay. You can pray. Don't be afraid, don't lose faith. You will find your help, there'll be a way. If you remember to pray. Johnny, drill.
This live stream is brought to you by Virtual Events Limited, Africa's leading virtual event streaming company. For bookings, call +234 90 807 9830. Email hello@virtualevents.ng. Visit our website at www.virtualevents.ng.
Distinguished ladies and gentlemen, may I have your attention? You're welcome to this very epoch-making event, and really, it's gladdening to see all of you, your faces, coming around to come and give honor and support to very distinguished brothers, friend, administrator Akim Ogunuro, whose work today we're celebrating here. It's about time because the crowd is not meant to be large. So as it were, we have sizable number of people that we can start with, and then we would be able to do justice to this event. It promises to be excitingly brief event that will run the gamut of knowledge sharing, experience, and meeting of new friends and old friends as well. So in the meantime, I will encourage all of us who are seated at the back to kind of move forward so that we could have please kindly all the seats except for the ones that are reserved for the distinguished people for the leadership and scoring team for this event. All of that seats are for us. So kindly move forward so that we can start this. It's a family of some sort. So everybody is known. Maybe they just reunion. So please move forward. Let's have a time. together. My name is Tommy Vincent. By God's grace, I'll be current this event. And welcome. It's always my joy to be part of Akim's events. I'm one of his proteges, I must say. He has been my lecturer, my brother, all the while. And I will never stop saying that. When you say gift of God, to celebrate it. Somehow. Before we start, just share a little bit of my experience some time ago, about 30 years ago, 35 years ago. We were in school, and he was teaching us law, law and society. And one day he came in and he told us that he had forgotten his keys. And so for us as students, it was a very happy time for us. Because we felt that it was a good time to leave and go and play. So we are actually pretending to be commiserating with the key that was forgot. Sorry. As we're saying sorry, we're carrying our bags preparatory to leave the class. I said, where are you guys? Where are you going? Sit down. We're going to have a lecture. So we said, lecture. He said, yes, we're going to have lecture. So we thought it was just like a make-up lecture for the fact that he didn't have his notes. So we started. And, we're using full caps, And then here he started. First page, notes, cases with citation, page of the case. Second page, same thing, offhand. Third page, notes, citation, cases. Fourth page. At the fourth page, everybody just put their paper down and started clapping. Excuse me. It's like, so if you had brought the notes, what would have happened? We all just stood up and said, Kinode, is this human being? That was 35 years, and he has never stopped being the hot. That's it's a gift. Please, let's just celebrate him today. Let's have a good time celebrating this egghead. And so I bid you welcome. It's going to be an exciting time. He's a friend, he's a brother. Let's just celebrate what God has given to him. So to start off with, I want to bring to the podium somebody who is eminently qualified to lead us in this prayer, a prayer warrior, a very, very astute, prolific lecturer of law, associate professor, and this year professor of law, Unilag, and the beloved wife of Akim, Dr. or let's say Professor Iyabode Oguniro, to do the prayer for us.
Thank you for that introduction, Mr. Tommy Vincent. Good morning, everybody. And you are welcome to this book reading. I will seek your indulgence to pray in the Christian way. So please, shall we pray? Our God and our Father in heaven, we bless your name, we exalt your name, we lift you up. We give you all glory and honor in the mighty name of Jesus. Daddy, we thank you for this, our gathering here. Is another step, oh Lord, forward to elucidate the content of this book. Father, we are not taking it for granted. Thank you, Daddy. Thank you, Lord, in the mighty name of Jesus. Lord, we commit the whole proceedings into your hand, oh Lord. We pray that you will come and cheer what we're going to do today in the mighty name of Jesus. At the end of it, let all glory and honor be yours. In Jesus' name we have prayed. Amen. Thank you.
Thank you. Please have your seat. Also, I forgot to mention that she's also a pastor, mother in Israel, together with Akim. Yes, thank you very much. We are going on into this matter. Just so that This event is like a sequel to what had happened before when the book was launched at sometimes earlier this month or end of last month at the Wheat Bakers in Ikoyi. I just want you to see the highlights of that so that we can, give a ground into this event.
Reit is a good platform for investors to invest in property.
There are a lot of assets in the market now, and these stabilized assets are looking for a secondary market.
Occupancy remains key. It always was and it always will. Creating new micro communities where we see a sense of belongingness, people wanting to be in a place, and if we can get that right, I think property will continue to be something that will provide a great investment case into the future.
From a lender's perspective, we still sort of remain focused on supporting the sector. However, what is real as a strategy is that sponsors have to have flexibility in their capital stack.
If we develop the REIT market in Africa, more specifically in Nigeria, you will see it as the catalyst for housing growth. Reit is a good platform for investors to invest in property.
There are a lot of assets in the market now, and these stabilized assets are looking for a secondary market.
Occupancy remains key. It always was and it always will. Creating new micro communities where we see a sense of belongingness, people wanting to be in a place, and if we can get that right, I think property will continue to be something that will provide a great investment case into the future.
From a lender's perspective, we still sort of remain focused on supporting the sector. However, what is real as a strategy is that sponsors have to have flexibility in their capital stack.
If we develop the REIT market in Africa, more specifically in Nigeria, you will see it as the catalyst for housing growth.
Kim has shown that real estate is actually a money game.
So this asset class that Hakeem has prepared a book on to help to educate us on is going to be a very important asset class in the future.
I believe this book is very timely in addressing some very important issues on the subject of real estate investment trusts, with particular reference to African REIT models, whilst also examining some international perspectives on the evolution and growth of REITs.
The book will serve as a guide for anyone who is looking at participating in real estate investment trusts in Nigeria.
This book has arrived at a very, very, very important time. With falling deposit rates, investment in real estate remains bullish. Investors are also looking for different and varied instruments for investment.
Without a doubt, the author has brought to bear his practical experience spanning several decades in the industry of real estate development, and in writing the book, he has simplified what is otherwise a complex area of the law.
Kim has shown us that in real estate, there is so much to do. For you to have found time to put down your thoughts, your ideas, immutably, as you have done, I'm extremely proud of you.
On that note, I would like to thank Mr. Hakeem Oguniro for putting his thoughts together in a book that will outlive this generation, and to congratulate him on the well-written book that every single person associated with him is proud of. Once more, congratulations, sir.
Thank you very much. Please, a round of applause. No less important is this particular event as well. That was a very star-studded event, and equally thinking even perhaps on the better note is this class of people that are seated here. Please, I welcome you all, and celebrate a good round of applause as well. I'm going to call on the chairman of events right away, and he's somebody that really humility personified. And really, the name, when you hear the name and you see the person, you're wondering, wow, with all that is there out there about this name, why is it this humble? I'm talking about Mr. Bode Adedeji, the group chairman of Bode Adedeji Partnership, with more than 25 years experience in leadership positions in the industry, in the building industry, director, members of many institutes of directors, and so many things like that. Please, let us celebrate Mr. Bode Adedeji, the chairman of the event. Thank you very much. He will give us his opening remarks.
Good morning, all. I know that the right person has prayed, who happens to be a co-celebrant and a pastor. But I always like to let us thank Almighty God each time this type of event comes up. Probably a year ago, if most of us had gotten such an invitation, the reply was none. But today, we're here. Let me thank the Honorable Commissioner for Budget and Planning for finding time to be here. And after that, I thank my own brother and his wife, the author of the book, Pastor Akim Ogunira. I've seen so many dignitaries here, and I would like to thank everybody and members of the press. When I got the invitation, I couldn't actually fathom why I was selected as the chairperson of a book launch. In all modesty, I can never say I'm cerebral. I can never say maybe I've done anything that any other ordinary soldier has not done. But what is important is that when you are called upon, kindly oblige. And one reason why I always tell my staff and my friends that there are some functions that I'll find it extremely difficult to reject. Anything on the intellectual side, if I do reject it or downplay it, then I have lost the track on one, what my parents taught me, two, what my school principal in secondary school taught me, and three, what my head of department for so many years, Professor Wahab, taught me at Ife. And what is that? It's contained only in the book of Hosea. And he says, and I quote, "Without knowledge, my people perish." And that's the motivation that when I was given the book, I had to go through it. Even though for people of my own age group, I'd been exposed slightly to the Reits way back in 1977. Because if you study at Ife then, all emerging thoughts, trends, and so on and so forth will be mentioned to you. You had option to go through them or to abandon them. But what I find about this book is what I want to say as my opening remark. why is it that when we have innovations in this country, we don't have the architecture to actually leverage on them and roll them out? Two, most things that Nigerians roll out, which probably are based on shared knowledge from other countries, no sooner it starts, the implementation flounders. One of the reasons why I know this kind of gathering is very important is this. I think, unless I'm mistaken, the organizer, the owner of the right of the book, has not gathered us here to come and play the role of marketing it or buying it or donating money. No. But we must be an agent to transport or transfer such knowledge as contained in this book to the critical segment of our society. I was asked one day, while I've been very absent in the last probably 7 or 8 economic summit in Abuja, and the only reason I gave was that there has always been a lacuna between what the eggheads say are wrong with Nigeria and what those who are in government from time to time have made up their mind to do. Example is simply this. REITs may be micro, REITs may be highly specialized, but any economy, particularly in the third world, that is significantly absent in what it's about, then it's a symbol that we are still stagnant. And when I see this book, I said to myself, and after 1 or 2 minutes, I'll take my seat, is that I love the books. But one thing I would like to see in most of Nigerian books nowadays is this. Let the authors treat all of us as if we are in primary school. That is real. Let there be a chapter that tells us why REITs succeed in America, why REITs succeed in Europe, and why REITs succeed in Nigeria only on paper. Because I'm always very conscious of my freedom now. If I say that REITs fail in Nigeria, I can be arrested. Please laugh that up. So what I'm trying to say about that is that what are those things that we must deploy to either make it a success, or if it has been successful, how can we actually increase the spectrum of success? To my mind, and I think that is not for the Hakim of this world to do, a few things are clear to all of us now. We are breeding a society that is so much afraid of learning. Among the young ones today, apart from lecture notes, forget about learning. And I go back to what I started with. Hosea said, without knowledge, my people perish. 2 is that we have some peculiar problem in the real estate industry, and he has highlighted it. Without capital in real estate, let me just say this, you are nothing. That is the truth. And for a book of this nature too, as time progresses, it will show some examples why you pass through major streets and buildings started 3, 4, 5 10 years ago are still abandoned. In some cases, it means that the conventional mechanism for funding is either inadequate or unsuitable. The question is, have we explored alternative means of funding it? The other feature I know about risk in Nigeria is that, and luckily a number of my guys, colleagues in the industry are here today. Until recently, I don't think there was any conference or seminar, which a lot of us belong to, abroad, either in Japan or in China, that a section will not be devoted to the funding of real estate. But the issue is this: where ownership of property, land, building is still fundamentally supported by ego, that my recognition, my status is proportional to how many buildings I can point to, owned by me alone and my family, 10-story building, 20-story building. In REITs, that's not the issue. As opposed in REITs, the fact is we. Until Nigeria began to see that at private level, corporate level, and government level, that the era of I'm the owner of the one in Ajosha Adeogun, I'm the owner of the one in Maitama, I'm the owner of this and so on and so forth. REITs and real estate in Nigeria will not develop. Let us start by saying, focus on we, and together we can succeed. Thank you all.
Thank you very much, Mr. Chairman. Thank you very much. Quite well said. Until we start engaging in we rather than I, probably we'll just be at that stagnant pace. Thank you very much. Thank you. Right now, I just want to also celebrate somebody who is an egghead, but in a very technical position and helping to move the state forward. Young man, but quite deep in intelligence and knowledge and experience. I'm talking about Mr. Sam Egube, the Commissioner for Budget and Economic Planning, Lagos State. Please, let's celebrate him. Thank you very much. Thank you very much. Thank you. Thank you. So if you know where to go to carry the money, you know, sir. Yes, we are calling them, sir. Right now, just to move things forward, I'm going to call the people who are going to be the book reviewers, the chapters, and they know their chapter. I'll call on Mr. Gbenga Ismail, wherever you are. Please, a round of applause for Mr. Gbenga Ismail, the managing partner of Gbenga Ismail and Partners. I'm going to call on Mr. Ege Akpata as well, to come out and be, that's the director, UCM Capital. Please, let's come. These are the people that are helping us to move the capital market forward. And also a very astute and brilliant lawyer, very brilliant, very well spoken of, Tosin Ajose of Deal HQ, adversary partners. Please let me celebrate them. Before we go into the book reading session, it promises to be a very engaging time. So just look forward to it. It's like a family talk. We're just going to talk around these books and see how we can move things forward. Actually, the chairman had kind of taken the step by pointing us in the direction that we could also do with the knowledge of Reit. But before then, let me call on the man we're celebrating, the man whose skill and whose knowledge we are celebrating today, to come forward and give us an insight on what this is about and what led him to this. Let me celebrate Akim Ogunoro once again, please.
Thank you very much, Tommy Vincent. Once again, I'd like to just thank everybody for coming for this book review. Writing a book which cuts across several facets of the economy. We think it is important that we take time to look at some aspects of the book which we believe will help us to drive the objective of writing the book forward. And that is why we have set out, after the presentation, to bring professional groups together. This is the first in a series of what we're going to do. But today, we're looking at three chapters. We're looking at the chapter on asset selection and management, because a REIT fails or succeeds because of its underlying assets. And so we think that since 2013, when we floated the last REIT, every other REIT that has come to the market has fallen by the wayside. I think part of the issue is because the assets were not properly selected, because investors are very discerning. Investment capital is very rational. So I think that that chapter is very, very important. And that was why we said, okay, let's bring an estate surveyor and valuer who plays in that segment, who understands the issues, to come and speak to that chapter specifically. The second chapter we are looking at today is the chapter on capital offering and listing. Now, a REIT is supposed to be a publicly traded instrument, and there are processes that go with it. And also we think that in the past, there are some aspects of the listing processes that people didn't get right, particularly in the area of roadshows, investor presentations, and related issues. So we also think it's important to bring somebody in that band who understands, who is a stockbroker, a banker, who has done this over and over, to look at the chapter and highlight the areas that people should pay attention to when they take time to float their rates. And of course, we're looking at a chapter on legal framework. All over the world, REITs have been birthed by law and legal instruments. As a matter of fact, while I was writing this book, part of the deep research I did was to study congressional debates in the US, because I wanted to understand the mind of the legislature, and you'll be amazed at the depth of members of the Congress, in putting together and creating the framework for democratizing asset ownership through REITs. Very, very important. So we also thought we should bring somebody who will look at that aspect. But not only that, the last chapter of the book deals with the future of REITs legislation. I wrote this book in the midst of the COVID-19 lockdown, and it's clear that risk management is critical going forward for all asset classes, not just REITs. So what will be the impact of risk management in the future? What will be the impact of sustainability? What will be the impact of technology? Those are the issues that we have considered in the last chapter of this book. We have also brought somebody to come and look at that chapter, look at the summary, and also give us her perspective. So that's the whole essence of this book reading. It's supposed to be an informal gathering. So they will speak to those chapters, and then we'll discuss generally, and we're on our way home, But just before I take my seat, let me just formally greet some of my big guys, Dr. Bolan Ali Balogun, President in Leamington Club. He was the one that admitted me to that club. You're welcome, sir. Kunle Ogunbayo, KOA consultant. When I joined this club, these are the people who received me into Met Club. Mr. Kunle Ogunbayo, please. Frank, we have been on the journey of pushing African real estate reform agenda all over. We were in South Africa together, pushing this agenda, and I'm happy that he's now the CEO and senior partner of Knight Frank in Nigeria, Frank Okosun. I just thought it's also important that he's also here today. We have all distinguished here people there, Badeba Jegbe, my friend and classmate of so many years, Mr. Kolapo Midire, who we both served on the investment committee of a REIT, which I was part of in my previous life. Kolapo, my friend forever, we used to call ourselves nonsense man, but recently somebody scolded me at home and said, stop that, start calling yourself great man. So great man, Kolapo Midire. Thank you very much. Please let us sit down, relax. But just before I sit down, I also like to, although the chairman has helped me to thank the Honorable Commissioner, my friend and brother. We met at the Oniru's Palace. We had some discussions about the possibilities, of what could happen through real estate investment trust. Incidentally, he was a banker, he was a consultant, he had facilitated for me at UPDC when I was CEO. So immediately he caught the vision of what we are trying to do. And I said, okay, it's also important to have government presence at this type of events, so that we sow some seeds, that when they are doing their ESCO meeting, that seeds will start to germinate. But in his own personal right, in his own personal capacity also, he's somebody who understands the significance of creating long-term funds to finance this type of assets, which we're trying to do through this book and through this event. Please just join me once again to welcome Sam Igube, Honorable Commissioner. Thank you very much. Okay, Tommy.
Thank you very much. Thank you, Kim. Very grateful. Respect, sir, Mr. Mudiri. Thank you very much for being here. Indeed, I won't stop mentioning this. It's a very important aspect of my development, which Kim is responsible for. I was in his office one day at USC, and ebulliently I was speaking English the way I knew how to speak English. And, I was trying to describe an event for him. And, I went about saying, look, that event was a paradigm shift. And, he listened to me very well. He didn't say anything. And after a while, he said to me, oh, paradigm. So, and, I will never forget it. And everywhere I go to, I always say, look, if you hear me speaking some good English, thank my boss and the rest of them. So today is another opportunity to do some paradigm shifting with our discussions. Like you said, it's a family thing. So let's have a time out whereby we all come out robustly to make sure that we leave this room better than we came in, knowing fully well that we have, in our mindset, we're waiting just for the opportunity to click what we have found as important for the next movement. Thank you very much. At this point in time, I'd like to call Honorable Commissioner Sam Igube to give us his remarks. Please, a round of applause for him.
Good morning. Mr. Bode Adeniji, the chairman of the occasion, the author, my big brother, very Egbon, Hakeem Oguniro and his wife, Professor Yabode Oguniro, special guests of honor, book readers and distinguished ladies and gentlemen. Just to say to Hakeem that I'm a fertile ground. Right? He talked about the possibility of sowing seeds, and I stand here today to say I'm a big fertile ground. It cannot be disputed the fact that housing or the entire real estate agenda has remained a challenge. It's clear that the industry is profitable, so why is it a challenge? The fact that there is a huge need is extremely clear, but why is it a challenge? Right? In Lagos, we talk about the difference between low-cost housing in a place where land is extremely scarce and the whole idea of affordability and whether really in this small size called Lagos, we should be thinking of providing accommodation for everybody who strolls into Lagos, right? The idea as to whether if you say that the population is 70% active poor, in other words, they live by the day, should it be a solution around rentals or should it be a solution around mortgages? When you deal with long-term money, there are challenges as to whether 20% works in reality or practically, and whether there is a way, right, to create funding at lower costs. And I would say that sometimes these challenges endure for a while, and it is conversations like this that keeps pushing the needle until it tips. And when it tips, sometimes we come into a new day where it now looks like that idea that had been long in coming becomes commonplace in a society. When the author talked about the nature of debates going on in the US Senate, one of the things I've learned in government is that you cannot lead your own. Once you slip into government, you lead the people. And when you focus on the people, you cannot, in dealing with the people, define your market segment, because the entire set of people are your market segment. And if your population is made up of Okada riders, then one day they will vote against car riders, because car riders are taking up too much space on the road, right? And it doesn't matter how useless the argument is, you are a population of Okada riders, right? So the complexity around real estate, I see as one of the major challenges. It looks it looks like it's not complex, but it's really extremely complex. Our population in Nigeria deals a lot with primary products. So the entire idea of creating secondary markets and creating complex instruments is not something that the mind embraces very quickly, except for the very distinguished few of you at the top of the pyramid. And the challenge will be how to drive that into the political space, where you have plumbers, electricians, traders, farmers, and all that space in it, where to be an aide of a senator means to help my brother and my sister, and therefore the caliber of minds that come to do that analytical work becomes absent in the analysis, where we are migrating, and that migration is happening very slowly, of where to own a property means you must have a compound. And I'm from Delta State, and in those days in Delta State, if what you have is a bungalow, then it's really not a house, right? So the whole idea of sharing flats is alien to house ownership. But we are moving. One of the big things that has happened to us is the oil and gas industry, and we may not know it. The oil and gas industry, when they try to liberalize marginal field, forced big men to talk to each other and to reach agreements, because no one big man could fund it by himself. Not just even in the funding, in the complexity of the transaction. So people had to come together to own part of what they call a block, which you really could not see because of the breadth and length of it, and it had to be represented in paper. And where oil was, first of all, expressed to you in data maps and in color codes, right? And you needed to then invest, wait, share with people, and work under controlled environment. We've not been very used to that. I tell people that we are a continent of chiefs and kings, where if the law doesn't favor you, you change the law because you are the king. But to operate under Reits and to operate with complex scenarios like this, you need to understand the law. You need to understand the principles. You cannot pay the police out of it. And I tell people that the biggest companies in the world are PLCs, but they are the most controlled. The rules that govern them are significant and very robust. And in Nigeria, the banks are one of the leading industries, but they are controlled. A bank has all the money, but it cannot turn into a car company because it can buy cars. Or it has the money to buy oil wells, and therefore the bank becomes an oil company. So these are some of the things we need to begin to think about as to how to lead the nation. And most of us in Nigeria are not like us in the room. Sometimes when we analyze things in cabinet, there are times we say, yeah, but you all stay in Lekki and Ikoyi, so are you really speaking for the man in Mushin and in Ajangbadi? When you sit in a bank and you create products for the masses, and you come to request that that product be changed because you are in ESCO, because maybe your wife complained about it, but the product is not for your wife. So how do you get into the minds of the 22 million people? How do you acculturate them in a manner that they understand what we are talking about and they are able to participate in it? How do you lead the nation in this direction? So I look forward to listening to those critical chapters which you talked about. I look forward to the change that is coming to mature, because I see it coming. I see that we are not who we used to be 20 years ago. Today people share real estate. They come together to make real estate investments, you know, and that means there is a lot of hope in the future. So I'd like to thank you for inviting me, and I like to look forward to the conversations that will happen after here. Like I said, I'm a fertile ground, and as I soak this in, it's quite possible that we'll begin to find something closer to that final solution for Lagos State. Thank you.
Thank you very much, Honorable Commissioner. Brilliant expression of your mind. We could see the brilliance that comes with it. Like I said, that's an head who is a technocrat and doing excellently well in his responsibility. By the way, coffee is served. Like I said, it's a free house. Coffee is served very brewed or or instant coffee, brewed. I had a brewed coffee and it was very good. So you can also, while we're talking, you can do that. So, by the way, we are going to the book reading session right now. And without wasting time at all, I'm going to call on the first reviewer to speak to the chapter that, and by the way, the books are also available. You can pick your copy, just pick your copy and pay. So you can be part of it if you don't have the book. And by the way, since you are in-house, the author will also do the autographing of the book for us as it were. So please pick the book and let's review it together. Ushers, can you please pass the book to those who want to have copies of it? Please, ushers. Yes, Tommy, the books are here. Okay, so those who want to pick the books, yeah. If you want one, they're available here. Okay, let's read. Okay, thank you. Now, so we go. I'm going to call Benga Ismail to start with his own portion. Benga, you are free to come here. Okay, you want to stay there? You want to stay there or come here? Okay. Okay, which one? You have to make a choice now. Okay.
Thank you. I'll come up here. Thank you very much. Good morning, everyone. I would like to just, if I'm permitted, to do some very quick traditional protocols. Recognize our past president, who is the chairman here, Mr. Bodiadi DJ, Honorable Commissioner, our host, Mr. and Professor Mrs. Thank you very much for this honor. My chairman, who leads me in the way on this profession, Frank Gukosu, and my big uncle, Mr. Kunle Ogubayo, and my colleagues, my co-reviewers here. Thank you very much for this honor. It really is a great opportunity for me to see that a book on real estate investment trust has been written, especially for the Nigerian environment. As it was said, we have a lot of papers that have been written, nothing put together for us to understand what it is. It's been almost 20 years for this to be coming. We've tried it in Nigeria for this long, but we haven't really seen the light of day, even though abroad we've seen a lot of practical successes. My task today is to review the chapter 5, REIT asset selection and management. I will read the opening paragraph because I believe this paragraph sets the tone of everything REIT is about. So here goes. A REIT is as strong as its underlying assets. A REIT is as strong as its underlying assets. It may be argued that with the transformation from passive investment vehicles into actively managed property portfolios, the REIT manager's role in optimizing the value of the portfolio is a critical differentiating factor. In our opinion, whilst the REIT manager's role is a significant value driver in this respect, the underlying asset of the REIT are still of its first importance. The success or otherwise of the REIT depends on the performance of its underlying assets. In recognition of the primacy of these underlying assets, the regulations contain copious provisions aimed at ensuring that the properties are properly vested in the REIT and optimally managed to meet the expectations of unit holders. And I will stop there. Now, underlying assets, optimal, and regulation, and then the REIT manager's role. Those are the essence, that's the essence of this chapter. It's 13 pages, and in each of these pages, it underlines why, what, and where. Effectively, strong assets, strong covenants, strong and sustainable cash flows, maintenance optimization, cap rate projection, and impeachable title validation. This is what this chapter speaks about. And effectively, it is the manager's role, the property manager, who is an essential participant in the formation of a REIT that remains very important. So the promoters of any REIT must select a highly experienced manager who is able to, one, identify your assets, bring it up to above average performance, which is really to increase the sustainability of its cash flow. So the initiating pages says asset selection. We all know about real estate. It's location, location, location. And that's what this is about, key considerations about the asset selection. When it says asset selections, we're talking about real estate, real property. It could be whatever it is, retail, industry, residential, or office blocks. Again, in this chapter, it tells us everything we need to know. The title due diligence checklist, title status, instrument of title. Effectively, as I said, this impeachable title validation. That is a crux and foundation of any investment. And it goes to regulation again. If these things are not right, the unit holders, again, are exposed to a lot of risk. Then, of course, there's leasehold investment grading of the asset. We'll speak about that later on. Now, going further, talking about management. After selection, it goes to management. Selection is key, but it won't work with poor management. And this chapter addresses this again, why it's important to have management. And in management, that's where the covenant comes in. The lease covenants, and then the maintenance side. Who is managing your facilities? What are they managing? Lease covenants is the strength of your cash flow. Are you going to maintain the levels of your rent? What is the projection of these rents? It is on these two that the pricing of the cash flow that we'll speak to towards the end of this chapter. So investment grading, valuation issues, quality of the assets, income generating capacity, tenant relationships. These are subheadings, facility management issues, and then asset portfolio. So the asset, I would like to talk about this asset portfolio. Now, asset portfolio linked to asset allocation, because that's where they mix. What is the spread of your portfolio? Is it your residential, your retail, your lease? How long are your leases? How much your cash flow? How are you balancing all of these things effects? It's important for the REITs because a REIT vehicle is all about cash flow. If you generate no rent, effectively, you don't have a REIT vehicle. Asset allocation. So for every fund, it is important that they understand what they can do. And that's where regulation comes in. You're not allowed to probably invest all your money in one particular asset type. You must spread this, you must diversify. So again, this chapter talks about this, and there are three major types: the equity, mortgage, and hybrid, which is a mix of this. Then, of course, you have the structural types, open-ended or closed-ended. And the chapter also tells you how you may spread this. And this is by regulation. And this regulation varies in the different jurisdictions that you are in. But again, it says real estate-related assets, and there must be some form of liquidity in your fund to allow you keep in operation. So that the chapter also talks about this. Now, asset selection, which is here, it says investor matrix. Now, this is the pricing. Our capital market reviewer will speak more on that pricing, because at that point, this is where the importance is. How you do use valuation to value the assets, and then you now interpret this to the market through unit metrics. And it shares with us various methods. It starts off with the net asset value method, which simply is a total asset minus liabilities divided by the total number of units issued. Now, this is what everybody understands. It's the basic one that we all know, and as valuers, we understand and interpret. Then it gets more complex when you go funds from operations. And this is the income generated by the REITs effectively, and through disposal, through rents, and tells you transparently how much money is available from these REITs. Then it goes adjusted. It has adjusted funds from operation. This is a further step which now looks into the maintenance issues, deducts maintenance from this flow. Then we go, there's the other one, which is the straight line rent adjustment. Precisely, again, this is, it starts heading towards accounting principles. Basically, calculating the REIT rents using a straight line method involves adding up all the rental payments over the lease period, irrespective of due date, and deducting expenses. All right? So that basically is projecting what my rents will be, and giving an estimate of what this. Funds available for distribution. Again, total income, disposal, and it looks at a holistic picture of what the assets, the underlying assets, can generate. Finally, the capitalization rate. Now, this is what valuers will understand and accountants hate. It simply just means we're using net operating income over asset value and giving you a yield and multiplying that. Accountants hate this because it's just like throwing darts in the air and we don't know where it's going to land, and we tell you this is it. So accountants don't like to use it, but really it's one of the best ways to value your property or value your portfolio. And we agree, but because it's a REIT and it's a capital market vehicle, you really have to understand how you multiply your cash flow. In this case, your cash flow is your rental income and any disposable income from your assets, and capitalize this for market performance over a period of time. Because this is what the unit holders want. Your shareholders, unit holders, want to make sure that their investment is growing in value. And it can only grow if your income is sustained over a projected period of time. And obviously, and also that it's close to liquidity, which means that I can move any of these assets to cash when I need it. So once your asset gains value, one of the things you have to, the managers and the fund managers have to look at is that how quickly can I move these assets to liquidity if I want to transform to value. And the cap rate is one of the things that tells us how it's a comparative instrument that tells us what is happening in the market. It's an indicative method that shows if the market is moving up or it's going downwards. And it's one of the things I try to project in the industry, that let us always keep touch with the cap rate. So effectively, this chapter addresses the most important issue of REITs, if your asset selection is wrong, we have to understand it. It is likely that this REIT vehicle will fail. If your asset selection is not poised to generate sustainable cash flow, again, you are in danger of missing bullseye. So you have to get this right. You have to understand what the mix should be. You have to understand the type of underlying assets you want to put into your fund. Strong governance is where the manager comes in place. The manager must always understand his leases. And the lease covenant is what we have in our agreements. Asset management is about knowing that we have a tenant that has agreed to be in this property for 10 years. That is sustainability. It means that for 10 years, it's like an insurance. My cash flow is assured for 10 years. I have rental agreements that every 3 years, every 4 years, or as it is agreed, there will be projections and there will be uplift in the income. That is where the manager comes in, because the manager looks at these interactions and informs the fund manager that we have assured income with projections, and using a technical term, projection above inflation indices that will beat the market. And that's the value that translates to the fund manager that he now starts to price. The facility manager, again, very important, because if your facilities start breaking down, what will happen will be migration. People start moving out of that property, they start exiting, your income, rental projections will start dropping over time, and then you start losing value. Which again tells you that after the facility manager's role is to advise when to have periodical maintenance reports, renovations, change from old to new. We have buildings that were pioneer buildings 15 years ago, but they're no longer grade A buildings. So those are the things that affect you. So the manager, the facility manager, remain very important and key functionaries in a REIT vehicle. But for Nigeria, one issue that needs to come, we need to talk about is the impeachable title validation. Now, why is this important? We have challenges, and a REIT is a public vehicle. We call investors. It will be very disgraceful to the fund managers if we select an asset that has a very weak title or one that can be challenged over time. It immediately threatens cash flow and even the asset value, because if we lose on title, we've lost the property and exposed all unit holders. So it's very important. And so these are some of the things that might take time when fund managers or investors, not investors, I mean promoters, are trying to select property. They might take 2 years investigating who owns the property. Is the title impeachable? How has it been transferred? Where did it come from? Who owned it before? So that process can take a long time. And those are one of the risk areas and challenges that we see because of the issues that are, well, would I call it systemic or structural in our own particular environment in that sense. Well, like I said, I think I have spoken to most of what has been identified in this chapter. It's 13 pages, but it is the most important part of a REIT. It is, in fact, that is what a REIT is. If you have no assets, you don't have a REIT. If you have no cash flow, there's nothing to distribute. So that is where we need to spend time. So I'm trying to everyone who will read this book, I would advise that you go to chapter 5. It explains what a REIT is and explains what you need to do to make it work. And seriously, we have to stick to the advice that has been given here. without strong assets, without strong covenants, without strong and sustainable cash flow, and maintenance optimization, really, we are heading nowhere. Thank you very much, and I hope this has been very clear.
Please, a round of applause for Mr. Ismail again. Brilliantly well put, well put. The summary, Reit's vehicle is all about cash flows. Without it, we are talking English. Without it, we are talking paradigm, not paradigm. Ladies and gentlemen, we will move on right now, and I'm going to call on again Akpata to speak from the capital market perspective, using the book as a flagship. Thank you very much again. Please, a round of applause for Mr. Akpata. Thank you.
Thank you very much. Good afternoon, everybody. I would like to stand on all existing protocols. Okay. Thank you to I'd like to thank Mr. Akim Oguniro for inviting me to speak on this book. I'm not really sure why he invited me here, given the caliber of people that are in the room, but I'll try my best to summarize the book and make a few comments around the contents of the book, since it's an area that is close to what I do. So it's a very detailed chapter on how you go about issuing a REIT in Nigeria. And quite frankly, with this chapter, you probably do not need to get hold of the SEC rules and the NSC listing requirements, or even the PENCOM requirements. Everything is in here. It's also very clear that it was written by someone who has actually done a REIT transaction before, which as of today, the only three people in this, the only three REITs listed on the stock exchange today. I understand that there's a fourth REIT that was closed the end of last year, but 6 months later, we still haven't seen it listed, so we don't know what the situation is. I think, so just again, I don't want to go through the detail of the chapter. It's 23 pages long, densely condensed text, the kind of stuff lawyers like to read. But for those of us who are not lawyers, it's quite a lot to read. But it is a very practical guide. It walks through specifically how you, for instance, go about picking advisors, which is a very big point. What people might not know, and which is not in this book, is that there have been a lot more failed REIT transactions than successful ones in this market. Failed meaning the SEC approved the transaction and it never got completed because they could not raise the money. So failure is more typical than not in this space. And so it's quite impressive that Mr. Oguniro was able to actually complete the last REIT transaction in this market, which was 8 years ago. So that's how little progress has been made in the time. He does have some very good advice around who you should select, and he talks about selecting transaction parties who have experience with REITs. Given the fact that there are only 3 listed REITs in the market, that will not be a big pool of people. So I think one thing to also add is that you need to select people who are passionate about the transaction, because they are not going to make any money from it. The last REIT that was done, which Mr. Agunro listed, took, I believe, almost 2 years, or at least 2 years to complete. I have the honor of having been involved in the transaction at the beginning when I was at BGL PLC, but as he explained in other chapters around things like declaration of trust, there are a number of obstacles they had to jump through to get the SEC to approve, some of which are explained in this chapter. He also spends a bit of time in the chapter talking about how you go about marketing a REIT transaction, the roadshow, convincing investors to invest, and what you need to present to investors to get them interested in the transaction. Again, not to be taken lightly, because, as I said, many people have tried and were not successful in getting their REITs listed. So, I mean, in practical terms, there's definitely a chapter that potential investors also need to get acquainted with, but more importantly, also the advisors, because there's a number of specific requirements here that I'm not sure that all advisors might be aware of, and Akim did a good job of updating it. So the references are all up to date based on where the rules and regulations are today. Now, there are a couple of things that I think, because when I spoke to Mr. Ogunro, he did suggest that I should, because I said, what am I doing? I've never reviewed a book before. So he said I should talk about the good and things that need improvement in the book. So I've talked about a number of good things, so I'm going to talk about things that need improvement, in my view, from a capital markets standpoint. So this chapter is 23 pages long. It has virtually no numbers in it, no prices. I think there's one number, maybe number 3 billion or some capital requirement somewhere, but it's a very text-heavy chapter, which is kind of slightly different from how the market works. I mean, you should have, probably good to have graphs, charts, tables in there that are market related. For those of us who are not lawyers, we like to see numbers to explain. Now, it's not totally trivial when I mentioned that. I mean, I actually pulled up a table, which I got some people in my office to create, statistics on the existing REITs. And it is quite sobering. I mean, there are only 3 REITs listed right now. SFS, which used to be Sky Shelter Fund, Union Homes REIT, and UPDC REIT. They're all trading substantially below their original issue prices. We are talking about some more than 10 years. How does real estate lose value over 10 years with the amount of devaluation and inflation in this country? I mean, so something is not right somewhere. They also trade today at substantial discounts to their net asset values. So again, from as low as 0.48 times to 0.7 times. Again, you can't really blame them. I mean, most banks in Nigeria trade below book values. So the question is, why is that happening? Either the market is not efficient or the book values are not realistic. But it does suggest something is not right somewhere. It would have been also good if the chapter did talk about what specific improvements need to be made now to the regulation, because clearly these things are not being listed, right? So it's either there's something wrong with the regulation or the environment. It would also been good to talk about, again, the market context. So one big challenge, obviously, that affects these instruments is they are competing in the fixed income market with very high inflation and interest rate environment. When this book was written sometime last year, was one of the rare cases where the rental yield on property was higher than interest rates in the environment. But again, that only lasted a short time. And in typical Nigerian fashion, we're back to where we were before. So the question is, how do you sell a REIT in a market where the federal government is paying 14% guaranteed, and your REIT is yielding 10%? I mean, nobody wants your instrument, and that's the truth. And that's part of the reason why you don't really see a lot of these things close. So the question will be, how can these transactions be packaged such that they are financially attractive compared to what's the alternatives? If you use US data as an example, your typical REIT in the US yields substantially more than a corporate bond of the same rating. And then you have the additional benefit of potential capital gains since you're in an equity instrument. So asking somebody to buy something in Nigeria that is not liquid, yields a lot less than the risk-free rate, is going to be a tough order. And even the last REIT that was sold, I know in the documentation somewhere they were promising 20% total return, not yield, total return. And so this was at a time when federal government instruments were yielding sub 5. And even with that, they still struggle to raise money. So it's definitely a lingering challenge in this market, and maybe the asset prices are too high. That might be part of the problem, because either your asset prices are too high or your rents are too low. But you do need to get that rental yield up substantially. And again, because of this price action that I've mentioned in the existing REITs, you cannot assume that capital gains is guaranteed, at least not on the unit price, because that has not been the trend. Again, I think it will be. I think it's also a good idea for us to see how we can bring in learnings in other environments. I think there are chapters that talk about the differences, but the question is really, what can we do here now so as to at least make progress? Because at least based on what we have listed, no progress has been made. I think at the end of the day, this is a chapter that I would definitely recommend practitioners read. Those who have had failed transactions, maybe if they read this chapter, they can be encouraged to try and come back to the market. But because clearly there are some learnings here. Again, this is a practical chapter from the view of somebody who has done a transaction before, and there are a number of things that, quite frankly, if not for that transaction, like the declaration of trust in this market, that would not exist. And so it's very commendable what Mr. Oguniro had done in the past. So I think overall, definitely a great chapter. In the next iteration of the book, which I'm sure will be soon, there should be a bit more market data and a bit more practical tips to potential issuers as to how they can have a competitive product, because at the end of the day, it's kind of difficult to get significant amounts of money to be invested for sentimental or other reasons, apart from the fact that people are going to make money on their investments. Right now, the data suggests they might not make money on their investment. So I think that's all I have to say on the chapter. I've been told I have limited time, but I think it's definitely a very fantastic chapter, and I definitely learned a few things from the rules which I might not have been aware of prior to now. Thank you.
Brilliant, brilliant. Thank you very much. Again, thank you very much. Again, that was a very brilliant, not so cheerful news, but at least was pragmatic enough to let us know that only 3 so far had succeeded in terms of rate investment so far, Nigeria and home UPDC. Incidentally, we have one of the team that made that UPDC success story is here now, the managing director of Wema Board Real Estate Company, Mr. Yemi Ejidero is there as part of that. Please help me celebrate him. Used to be the finance director of UPDC, together with Akim was the MD there, and it's amazing. It's amazing. So it's part of the discussions we're going to have, because really, why is it not succeeding? Why is it that you buy it at a price, and right now there's a dip in that price? So what is the encouragement? But we want to leave this room knowing fully well that this will be the next thing to do and to get to work in the way we should. Right now, I'm going to call on Tosin to please come up and give us the legal perspective, using this book as a standpoint as well, of this REIT investment. Please, a round of applause for Tosin as she comes up. Just a minute. Please, I need to quickly acknowledge the following people who are online watching. Professor Kola Akinsomi of University of Wits, South Africa. Wherever you are, we acknowledge your presence there. Mr. Adedeji Adele, the international president of FIABCI. We acknowledge you wherever you are. Mrs. Ifi Omunakwe, CEO, Lexon Capital. We acknowledge you wherever you are there. Femi Akintunde, Group CEO, Alpha Mid. We acknowledge you. And we have quite a few people, a lot of people also online watching, being a part of this show. Wherever you are, just know that we acknowledge you. We're thanking you that you're part of this great event. Thank you. Tosin.
Good morning, everyone. Right. I think it's afternoon already. Good afternoon, everyone. Thank you for inviting me, and please permit me to stand on already established protocol. I was not able to make the book launch, so I would like to congratulate my Egbon on this epoch-making time where we now have a book that can be a reference point for real estate investment trusts in Africa. Thank you very much for taking the pain to put some of your pains and lessons into a book that we can all read and learn from. I would first of all talk about my view and my experience the first time I got the book and got the opportunity to read through. The first thing I noticed was that it was quite a very easy read compared to the complexity of the nature of real estate investment trusts, as a lot of people have already said. I was also very impressed that it captured all current trends around real estate investment trusts, both from an Africa perspective and from a global perspective, which is very, very good and interesting. I also like the way Mr. Oguniron handled the comparative analysis from different jurisdictions. I think that is very, good, and it gives us, opportunity to see what other people are doing, in other jurisdictions. I also like the fact that it was very obvious that it's a product of heavy research, and beyond research, it's also a product of experience. He is one of the forerunners of real estate investment trusts in Nigeria. He's promoted one of the most successful. We heard Egi talk about the dire stories of real estate investment trusts in Nigeria. And I remember that, far back in 2012, when the UPDC was contemplating the UPDC Reit, I was a very young lawyer then, and I had worked, on the legal side advising the issuer. And I remember that one of the things that I take out of that experience is the fact that UPDC was a doing issuer. There are many times that you're advising an issuer that knows next to nothing about the product they're taking to market. They challenged the advisory team. They had their own ideas. They were on the table. They pushed the boundaries. They challenged the regulators. And I think that when the history of real estate capital market is being written, I think Mr. Oguniron's name would definitely be there in gold. So thank you again very much, sir, for all your contribution. I'm supposed to be reviewing chapter 4 and 10 of the book. Chapter 4 deals with legal framework for real estate investment trust in Nigeria, and I'm just going to quickly run through the notes that I have. So first and foremost, it goes over all the laws and regulations that relate to the establishment of real estate investment schemes in Nigeria, starting from the Companies and Allied Matters Act, the Investments and Securities Act, and the Securities and Investment Commission rules, the Finance Act, and the 2017 Pioneer Status regulations. So permit me to mention that the primary regulations for real estate investment trust in Nigeria are the Investments and Securities Act and the SEC rules and regulations as amended, from time to time. The chapter also talks about the structure of real estate investment trust and all the potential ways that real estate investment trust can be structured, starting from, settling as a trust, and it also talks about a real estate investment company. And most impressive is the fact that we also have, the rules and regulations, talking about structures, other structures permitted by law. And I am always a stickler for drafting regulations that are agile and progressive. And I think that is one of the things that the SEC had tried to do then, to give themselves some measure of discretion to determine other structures that could be viable, in taking REITs to the markets. In future, I anticipate that we will see a lot of, other creative, solutions that would take real estate investment schemes to the market. We may see unincorporated joint ventures. We will see crowd-funded investments. We may even see non-fungible tokens coming to the market, to, carry securities that are underlined by real estate to the market. I think the chapter also talks about regulatory requirements for real estate investment companies and REITs. It talks about the differences between a real estate investment company and a real estate investment trust, where one is set up as a trust under a trust deed, the other one is set up as a regular company that is registered under the Companies and Allied Matters Act, and the investment is regulated by the constitutive documents of the company, which would either be their memorandum and articles of association, or where they do have their shareholders agreement, which would, typically detail the terms of, how the scheme would be run. The chapter also talks about the parties to the transaction. There was mention of property manager, trustees, custodian, and of course the role of the investment committee, and also about the quality of underlying assets. I think Mr. Ismail mentioned, a lot about that when he talked about the chapter that he was reviewing. I think one other thing I would like to touch on is asset allocation, and that chapter mentioned a lot about asset allocation. I think that in terms of asset allocation, real estate investment schemes are overregulated. I don't believe that it is the role of the regulator to determine what percentage of the portfolio goes to brick and mortar real estate, especially in this age and time. I mean, Eggy in his presentation mentioned that a lot of the real estate investment schemes that have gone to market are not able to compete, and they carry this burden where they have to have at least 75% of the fund invested in brick and mortar real estate, and they're only allowed a window of 10% as liquid assets, which would, I mean, with a bit more flexibility, perhaps they're able to do a lot more creative things that would make them balance the odds and make the fund generally more profitable. Sorry, I'm going to have to switch to my notes on my phone. Apologies about that. My device has just powered off, but I was able to capture my notes in pictures. So please allow me to just quickly refer to those. Yes, yeah. So I was talking about the parties. Yes. So I think that asset allocation is one area where a little bit of flexibility from the regulators will help, in deepening the market. I also think that in this age and time, real estate is moving away from brick and mortar. There's so much more that can be done, and the world is recognizing that more important is the cash flows from the assets than the brick and mortar themselves. You would hear these days about the concept of real estate as a service, and that is becoming, a thing, and you are able to benefit from the value of, the revenue from real estate without necessarily participating in the title to the underlying asset or the brick and mortar itself. So I think that, perhaps, that focus is a bit overstated in this day and time. The most interesting part of the chapter for me was the mention of the structures of Islamic real estate investment trusts. And I think for those of us that are following, the trend of the capital market, you will know that there seems to be so much that is being achieved with these Sharia compliant instruments. I think, the chapter very succinctly captured what the potential, for real estate investment trust will be if we're able to, look in the direction of, structuring real estate investment trusts that are Sharia compliant. I think there is a huge captive market for that kind of investments. And I think the chapter also, mentioned the different levels of compliance that would be required for a real estate investment trust to qualify as being Sharia compliant, all the way from the selection of the assets to the use of the assets to the fundamental principles of the investment to the way that the fund itself is run. And it also talks about things as critical as tenant activity, and that anything that is haram would not, the property cannot be used for anything that is considered to be haram, including things like alcohol, consumption of tobacco, betting, and all the like. So if you find yourself in a place where you are considering, setting up that kind of scheme, then you need to ensure that all the way from ground to top, you are able to justify that the structure will be Sharia compliant through and through. I'm also supposed to review chapter 10. I think that is my favorite chapter in the book, and it talks about the future of real estate investment schemes. I'll talk about my own, take on what I think, the future is, because I think, I should have the latitude to throw in a few things around there. I think that the regulation that we expect to see in the future is one that is agile and one that is progressive. From my experience, especially working on the UPDC Reit and a few others that I had, subsequently worked on, unfortunately never made it to the market. But one of the things that I found on UPDC was that we had to do a lot of heavy hand-holding for the regulators. I think also we had to find, solutions that were homegrown that would allow the fund make its way to markets, irrespective of all the challenges that we have. And at this point, I'd like to just talk a bit about the primary real estate markets. So there is no way that the real estate capital markets will be immune from all the issues that's already belaboured the primary markets, and there's so many of them. There are title issues. I think that Mr. Ismail spoke about that, being able to assure and guarantee the quality of title for properties. Even for some of us that work as lawyers and have been in this industry for over a decade, there are still times that you miss it because the environment does not allow you actually have access to sufficient information or things that would allow you, take, decisions as to the quality of title and ensuring that at every point in time it is foolproof. Sometimes, you have to, you're doing transactions. Mr. Ismail talked about, asset selection taking you sometimes up to 2 years. That doesn't happen in an environment that is trying to promote investments. We also have issues around foreclosure, which has become, quite, a very, significant issue, and a real estate investment scheme is not immune from those issues. You also have, a major, concern around tenant default and what happens when you need to exit a tenant from a property. A real estate investment scheme is also not immune from that. In Nigeria, you find situations where a tenant, a property owner and a tenant are in court for many years trying to eject the tenant, even when the contract is expired, the tenant is not meeting his financial obligations, but the law just still protects him. Those are some of the issues. We're talking about the fact that already real estate investment schemes cannot promise returns that, are at par with other, instruments that are in the market. And here you cannot even guarantee, the cash flows from the assets, because one thing goes wrong and then, you may be in court with a tenant for the next, 3 years, and, the property is just locked up and there is significant value erosion, at that point. So, like I mentioned, we need regulation that is agile and is progressive. We also expect that in the future, there will be a lot of tech adoption that would come and disrupt the market. I don't know how prepared, the players in the market are for these incidences that would happen, and more importantly, how prepared the regulators are. I think also that we expect that, regulations are data-driven. So how much capture of market data are the regulators able to do? Is that what informs their approach to regulation, or is it just sentiment or political reasons? So I'll talk a bit about risk management. I'm really very excited that Mr. Oguniro, took a lot of, time to explain and elucidate on risk management around the real estate investment scheme framework. I think that one of the things that I would like to see is heightened liability of, board members for real estate investment companies, heightened liability for trustees, investment committees on how they actually manage the affairs of a real estate investment vehicle. I don't think that anyone that takes decision on behalf of investors should be insulated from liability where there is a need to. I also think that, the regulators need to enforce very strong risk management frameworks and have the understanding that risk changes per time. The risks that were very incidental in the real estate market a couple years back, many of them are not what we are facing or dealing with today. So understanding that the risk profile of this market changes, and being able to prefer solutions that would change as the market changes is very important. I'll talk a bit also about the pandemic and the impact on the real estate market. I think even for investment grade assets, many of them that have been able to guarantee their cash flows over time, many of them had to deal with defaults, tenant exits, and all of that. And we also know that the expectations of tenants in this market and even globally is changing. People want a lot of flexibility. You find yourself in places where people are negotiating. I want to take a lease on a commercial property, and I want the flexibility to only pay for the days that my staff come to the office. Those are some of the things that, are becoming a reality in today's world. So what and how are the stakeholders in the market doing to ensure that they stay on top of these issues? I think usage arrangement is also changing. Security has become a major concern for a lot of properties, like it wasn't before. All of us know what happened during the NSAS protest, where a number of commercial real estate assets in Lagos, suffered, severe damages. A lot of people lost, money. A lot of people lost, businesses, and some of them are even up until now yet to recover. Finally, I'll talk about sustainability, because the chapter did a good job also talking about, these issues which are, paramount in today's world. Gone are the days when people's consideration for making investments were only the financial factors. More and more we are seeing environmental, social, and governance becoming, major factors for consideration for investments, both locally and globally. So, anyone who's taking an instrument to the capital market needs to ensure that they are paying attention to some of these other factors that people consider before making investments. The chapter also talked about decarbonation, energy efficiency, things like green buildings, that allow you score a few points. Sometimes, you can even, complete an asset and earn carbon credit just because, you have structured, the asset as being energy efficient. Which are cheaper and even safer than some of the alternatives that we go, looking for outside of the country, and we spend, so much resources trying to bring in, and all of that. And I think finally, I would like to mention that regulators now need to pay attention to sustainable reporting and have, a structured way of ensuring that, periodically they are receiving, reports from fund managers, trustees, and the like on sustainability around, the structures. I think, in a nutshell, that's my summary of Chapter 4 and Chapter 10. Again, Mr. Oguniro, thank you so much for the opportunity to be here today. Thank you very much.
Please, a double round of applause for Tosin, please. Brilliant, brilliant. Deep, 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 deep. As a matter of fact, I had a request that I will be recorded because there's a lot of sense going on here. Yes. What I was thinking about, the concept of, shifting from the, sense of brick and mortar of real estate concept to that of service mentality. How do we take it forward? How do we make sure that not only that things are moving, but also they are sustainably moving in a way that we can say that there's value added to this industry. At this point in time, the family talk starts, because we have had the reviewers who read the book. Now we can ask questions and throw serious banters around what they have discussed. Remember, Mr. Benga Ismail was talking about, the perspective of the practitioner, the real estate practitioner, when it comes to this issue. Remember that. That's so we want to talk about me. Many of us are into that sphere or that aspect. Again, was talking about the capitalization and capital instrumentalization of it. How do we get value from it? How do you ensure that, just like some real estate stock you buy, some stocks you buy in the market, that over time give you value, and there's some that just depreciate everything that you have put into it. I remember buying Onka high-tech in those days. Onka high-tech, it never flew. We just wasted money there. Would real estate rates, would it be that way? How do we take it forward so that it's a sustained gain for those who invest in it? And then Tosin has come very well, said very well put about the legal dimensions. Really, real estate when it comes to ejecting tenants, recalcitrant tenants? How do you get value for time that you lose because somebody refuses to leave? And then sometimes they go about strutting arrogantly, talking as though they own the world, and yet they're defaulting. How? So this is time for us to banter around this and get something out of it. I would like to start with, he might not want it, but I'm going to call him too, very cerebral, to come and start off this. Mr. Kolapolomidre, you must give us an insight. Thank you very much. Thank you. You can come up. Oh, you want to stay for? Okay. Okay, you want to start? Okay. Mr. Kolapolomidre was the foremost and the legal advisor of GT Bank for a long time, when it was started to when it, as a matter of fact, when he left there, they had to recruit three people to take up his job. That was how. Please let me celebrate Mr. Kolapolomidre.
Thank you. Thank you very much. Even if you had not singled me out, I would have talked. 2 reasons. First, I must congratulate Hakeem on this. It's a brilliant effort, and I haven't had the opportunity to read the book until today, and I've listened to the comments, and as they were talking, I was following. And then secondly, I think I must also say thank you to Hakeem, because he also gave me the opportunity to be a part of a Reit. Oh, not just because we were friends, because, I mean, he did his job. I was in finance, I'm a lawyer, and at the time that UPDC Reit was coming into the market, I was running a mortgage bank. So, in terms of being involved with real estate and real estate finance, I've had that opportunity. But unfortunately, I was never part of a Reit before then. And when I became a member of the investment committee, that was one major challenge. There was no local material, or a material that is, at least has a bent towards the Nigerian environment. One had to do research on the internet, find books that you could find on real estate. I wish it was now. A book like this could have just been the first thing that I would have read. And it's going to continue. So this is why the book is very important. At least people coming in to read now in the local environment has something that they will start with. So thank you for that. Now, issues have been raised, and I must also thank the 3 book readers, the comments that they have made. But let's talk experience now. Someone who is involved directly. Mr. Ismail talked about asset selection, and today that is still a problem. The regulations tell you, as Mr. Joseph said, that is from the perspective of asset distribution. How much of it will be in brick and mortar, how much of it will be liquid assets, and so on. Now, you have these assets, but you want to move from one asset class to another. You are looking for brick and mortar. I can tell you, practical experience, 3, 4, 5 years, you are looking, you can't find. And I'm lucky today, maybe I will find answers, because we have many real estate valuers here. It's always a problem of valuation. You have promised the unit holders a yield, and they expect to get it anyway. Now you are looking, SEC says, go and look for those assets. It's not as if they are not there, but the value that they are giving you, if you invest in them, you will never be able to deliver the yield. And again, as I said, the real estate valuers there may help me. Yeah, they told us, at least the basic understanding, I'm not a value, but at least to be able to do my work, we are told that look for what is the market value. That once you invest, based on market value, you'll do well. How do you determine market value in an environment, in a market like Nigeria. Because the only way that I have seen from example, practical experience, is that the man builds his house. As the chairman said, he has built. Either people bought or they built, they are the owner. People come, they say they want to buy, he says, no, that's not my price. He fixes the price. The price is totally unreasonable, but that's his price. One day, if he succeeds to get someone to buy it, the whole of the market, that is now the value in Nigeria. Despite the unreasonability. And who is this person who bought? He probably found some money in government and is looking for a place. I don't want to call the word. So, but from that day, market value changes. And therefore, SEC is running after you. You are giving reports daily. And they are saying, go and get, but the asset will not get the yield that you have promised to people. So, Chairman, sir, maybe we are still kind of stuck in the high market because the person who built, who did not take other people's money, is not due to give any explanation. But once you take other people's money in the form of a Reit, you must answer to the unit holders. You must answer to the regulator. So at least, but thank you at least, as I said, Mr. Oguniro, for the book. At least insight is here. But these are challenges, the practical challenges we need to address. Again, talk about the liquidity of the units. Again, we have a market that is also different. Even banks, some of them are trading below book and so on. And where you can't deliver the yield that you promise, on what basis do you expect the market to buy the Reit, the units that is in the capital market? So these are challenges. I liked the argument of Mr. Joseph on SEC or regulator looking at distribution of assets. But unfortunately, I thought she was going to give a suggestion. You see, unfortunately, Reit is about brick and mortar or instruments related to brick and mortar. If we are not careful, the moment we say put money in liquid assets, today, no Reit in Nigeria will put money in real estate. In real estate, they will go and do other forms of instrument. That was why I said I like the argument, but unfortunately, I thought I was waiting for a recommendation, maybe, but I don't want to take the time of others. There are so many who would like to speak, but those are my comments. Again, thank you very much, Akeem. Good job.
Thank you. Thank you. Maybe, Mega, you have to speak to this because you said something about when you're reviewing the capitalization rate, how it could be arbitrary in the sense from the perspective of accountants mainly, and given what Mr. Omidre is talking about, how do we relate it in the sense of pragmatic decision making vis-a-vis the expectations of unit holders who want value for their money? Of course, we're going to talk more about it. Right now, we have Mr. Somebody who is raising his hand up online, Oluwaseun right now. Please turn your video so that we can be projected, so it can be a part of the discussion in-house. So, Mr. Ismail will just come up and afterwards speak because, like I said, it's a family talk now. We don't just want to banter. We need to take pragmatic decisions so that you might find yourself in that space where you can turn things. And I like the way Mr. Gube said about the tipping point. Was that what he said? The tipping point when it's like it's sliding, ticking, and then there's a tipping point for it. So let's speak to that. So, Mr. Muraina, wherever you are, please put on your video and let's talk if you're there. It's now available. Okay, so you want to?
Yes, thank you, Mr. I'll take us back to the challenges of REITs and its precedents. Where this started from, where real estate companies, corporate companies that were listed in stock exchanges had difficulties in projecting their rental incomes because they were taxed on two bases. That was the reason why they started looking for alternatives. What was the problem? Their rental income was not translating to correct share market pricing. So the rental income, asset-based, was much higher than what the market share price was reflecting. So it has been a historical problem. So the REITs and securitization was supposed to be a solution to these issues. So valuation, and that's why I was saying, and in the method of pricing unit holder shares, we need to understand the method that we're using. Those who use REITs prefer free funds, or what's it called? Funds from operations. Those who practice REITs, that's what they like to use to price their shares. However, if you want to value the assets, so if I'm valuing this particular building we're in now, it has a replacement cost value. Because of inflation, that will give a high asset value. The reflecting income from it, from rent, may not be hitting the right note, which is where accountants price. What is the strength and yield? Now, as valuers, we are always confused. What do you understand yield to be? What do you understand cap rate to be? So the challenge we're talking about is cap rate is usually low. So when the investor or the fund manager is talking, he's talking about cap rate. When the valuer is speaking, he's talking about yield. He's telling you that based on projection, based on what I see, this is where your year's purchase is going to. So we need to agree which rate, which method, which base. And one interesting thing, I'll go to asset selection for Nigeria particularly. I've said to, let us look around. This is going to address your, where are the properties. Most of the rates, we're looking at A-grade, VI type, ECOE type properties to select. But from research, I've found out that the best performing assets are these lock-up shops. These lock-up shops that we see springing up everywhere. I have done a yield research on them. They give almost 20% on rental projections. Cost of entry is low. If investors bring all of this together, and we did an analysis of this, I'm telling you the unit price, but I don't know if SEC will say this is the kind of asset you should put. Is it a risk asset or not? But over time, I found that default rate, not too high. Even if somebody defaults, they get him out so quickly, somebody immediately comes in. So there's a quick replacement. And it's so the cash flow is so sustainable that I haven't seen a loss yet. But what does it suffer from? Cash flow injection. So there's not enough being projected. So why don't we have a REIT that is just specifically for such retail types? And we will then be providing for our own particular environment. When we look at the malls, these malls that we have here, these malls are currently alien. Price and yield will not satisfy the investor requirement today because it's benchmarked on global standards. So we need to solve those issues and look at our own specific environments. And then, again, I agree with the asset allocation. We have to look for what works for us. Global standards are great, but our environment is different. Regulation must address our own specific issues in that sense. And if you look at the yield, the stock market does not outperform real estate investment. The pricing of banks, the pricing of the insurance companies, it's still not outperforming real estate. It's just that the pricing is wrong. Asset values reflecting in share market prices, there's something wrong with that. Rental, we need to look at the rent inflows. Some of the properties have higher return in terms of real income than even some of the companies that are quoted with high prices on the capital market. So pricing we need to look at, and that was addressed in the chapter 5.
Wonderful insight there. Yes, yes. I mean, here is his answer, and then we'll come back to you. Okay. Wonderful insight there. You can see. Yeah, guys. Please.
Okay.
Your name, sir?
Okay, good afternoon. My name is Rogba Malade. I want to maintain existing protocols. Congratulations, Mr. Hakim, on the book. It's a fantastic read. I call it the A to Z in Reit. That's the way you sum it up. I've read it twice, actually. Twice. At least for the past 2 weeks. And I'm still taking notes. Quickly, I'm not going to waste time. I can't leave here without making 2 points. It's not every time you see the Commissioner of Budget and Economic Planning of the, if arguably maybe the biggest economy in Africa, the top 3. And he makes a statement that, as far as I'm concerned, gives a fantastic opener for a setting of professional bodies that is here. He made a point, and I was watching around to see if people who got it. What I got from what he said, and I love it. Mr. Hakim, fantastic book. But this book, the people that are up there are not going to read it. What they want to hear. Lagos State is generating, say for instance, 100 billion IGR. I'm just saying, 100 billion. Mr. Commissioner, based on what I'm telling you about this vehicle, you don't need to know what it is. It's going to increase your IGI by 30% in the next 2 years. That's what they want to hear. Really, do you have people, whether it's in Nigeria or abroad, confirmed data that are ready to bring funds to generate the economy, whether it's Lagos State or like, oh, we have. Stanbic IBTC has the records. Standard Bank has the investors right now, I know of this, that are ready to bring the funds in. Wow, billions of dollars. Now let's talk. Am I making sense, Commissioner? I'm throwing this in. Mr. Hakim, you brought us here, I believe. Yes, reviewed the book, fantastic. But I think you brought us here as professional bodies to take it up. Where do we go from here? How do we impact the regulators to make things work? I was with someone 2 days ago, a very big real estate investor, and I threw him this book. I told him, Oga, you have to buy it. He went through a bit of it, and he said something. He said that, this man, is he charity? I said, I don't understand. He said, this man just poured all his experience, everything in this book, and he gave everybody for free. And I think you did that not to make 8,000 or 5,000. So to cut it short, it's a charge. And I'm throwing it to hit the commissioner also. I think the key issues that this book brings out is clear. You have valuation issues. There's an institution that handles that. You have tax issues. There are bodies that handle that. It's clear. You have regulation issues. That is beyond this table. Mr. Igube is here. We are talking of title. No matter what you do, Lagos State is where majority of that fund is going to come. Title is there. He might not be in charge of title, but he's sitting in the powerful seat. So all what we need to do to move forward, I don't think we are here to really talk about if valuers are doing their job well or not. I believe if you go and see a doctor, you don't question him if he's giving you a prescription. So let's leave that aside. That's not why we're here, with all due respect. Where are we going with this? We've seen there is a great opportunity. I'll say it again. 2 years ago or 3 years ago, a lot of people don't know this. It wasn't formal. Me, Adele, which Mr. I think he was in the last program, contacted me when I was chairman of the valuers in Lagos and said, Rogba, we have people that want to invest from abroad. They want to bring their money. They're not complaining about your asset class, whether, as you said, brick and mortar. They have done their analysis. They want to come into this town. The issues are clear. If I bring my billions of dollars here, how do I take it out? If I want to get my returns, how do I take it out? It's all regulatory. Taxes, valuation issues that they want to clarify. So what I'm saying, and I'll say it, sir, it's a charge. The organizations, a lot of them are here. Let's form a small group. Maybe one from each group and connect with government. Government is sitting here. This Saolu here. As far as I'm concerned, the governor's here. Mr. Governor is here. And let's have that We already know where the funds are going to come to change the system. We already know what Mr. Buhari wants to hear. The nation is broke. He wants to hear that this thing is going to bring billions. These are the guys. Let's fly them in from South Africa. Put them down. And let's start and see how we can change the relation to make things work. It's just a charge, and I think we have that great opportunity to move the system forward. Thank you.
Thank you very much. Thank you. I hear you, because really, if you noticed what the Honorable Commissioner said when we started all, it really was a good opener to see that would those people that matter take this as the reality of the need to move things forward. Because really, let's speak to the real issues. Reit, as good as it is, he kept emphasizing it's about cash flow. And where's cash flow coming from? Patronage. So, we need to move forward. How do we get it? Yes, sir. Yes, sir.
Kim, well done. My name is Kunle Ogunbayo, and yes, it's true that Kim sits on our table when we come for lunch on Tuesdays. But what he forgot to add was that he was also my employer when he was the UPDC managing director. But that's not why we're here. We're here to talk about his book. Unfortunately, I've not had the opportunity of reading the book. And but that is something that I will remedy very soon. But listening to the flow of discussion, I have 2 or 3 comments. Number one is that a REIT is an investment fund. It's for making an investment. And a REIT will invest in brick and mortar. But ultimately, that brick and mortar sits on land. And the biggest problem that I have seen, and I've been in the built environment for 40 odd years, is the instability in the ownership and access to land. And I feel, and I must ask, I don't know whether that topic was copied in the book, but it is fundamental, because a REIT is only as good as what it is investing in. No matter how good SEC is, no matter how good the people who put the REIT together are, the land on which your investment is sitting must be one that is realizable and one that does not have any, as you say, any conflict. I'll give 2 or 3 examples. About 10 years ago, we were going to do a project on Lagos Island, along Bangboche Street. And there was a plot of land that ultimately could have been about 100 meters by 50 meters. When we started the research, it was owned by 100 years ago, it was owned by one man. But over the years, it had been subdivided and subdivided and subdivided. And even people who are not even family members, but who had been living there for a long time, claimed that they also had ownership. Eventually, we got about 80% of them to agree that yes, we will all come together and do this thing, but 2 people held out, said no. And that investment opportunity was lost. Because unless you had all of them agreeing, it was not possible to do the project, and it could not go to any investor, and no REIT will take it up. So it reminded me of a book I read. It's called Rich Dad, Poor Dad. I'm sure that many of us have read it. And one of the sections there talks about land ownership. And it talks about the concept of how land is owned in the UK, for instance, or in large parts of Europe. It's called primogeniture. It means that the eldest firstborn, it used to be male, now it can be male or female, inherits the whole of the land. So no matter how many people as descendants of that family, one person sits and controls the land. Lord Governor, who controls all the land in Grosvenor Square, inherited it from his father, who inherited it from his father. He's not the only person who is a governor, but he is the one who controls it. So I think part of the challenge we'll have, and perhaps this is where the commissioner can help, is how do we put into place a situation that makes land ownership easier. How do you make sure that you have the legal title to the land? Incidentally, by the way, this is peculiar to Western region. You know, in the north, it's easier. Unfortunately, I do not think there are many investable properties in the north that will attract a REIT. So I'm just saying this, that yes, a REIT is good, but we must look at the fundamentals of what a REIT will invest in before we start to set up REITs. Kim, as I've said, I will read the book, perhaps, and I'm sure you probably have dealt with all these mundane issues, but for me, as a practitioner in the built industry, these are real issues. These are the things that have been holding up investment in property, in real estate, and this may be one of the reasons why REITs have been difficult to put together. Thank you.
Thank you very much. Permit me to extend, to use the English I learned from him, extend the paradigm or paradigm. In fact, that's what we just heard about in the north. There are not many investable properties in REITs and things. Shouldn't that be a basis also of our considering how do we get those kind of non-so-called investable properties into that bracket whereby we can start developing REITs around them? Because if we're only saying it's about Lagos, it's about Ibadan, it's about maybe Ibadan, Lagos, and Port Harcourt, how long do we hold on with extending the frontiers of this? You know, Tosin said so many things about the problems, legal problems. Funny enough, some of those problems are probably peculiar, just like the last speaker said, to Lagos, to Western Nigeria. But how do we move it forward? How do we get these things? It's this family talk, and that's why we need to, let's bear our opinions on these issues. How? Thank you very much.
My president, congratulations. My name is Nosike. I just want to talk on, I haven't read the book, I'm sorry, I apologize. But I'm sure that I will leave here with a copy.
Permit me, sir. Nosike used to be the president of Chartered Institute of Chartered Institute of Secretaries, is the president of Chartered Institute of Secretary of Nigeria, ICSAN. Please, you're welcome.
Thank you very much. I just want to talk briefly on governance. You know, the biggest risk we know now is the governance risk. That all that we've been talking about, if you don't have a proper governance structure, they will come to nothing. And having a proper governance structure should actually start from the beginning. We usually have a problem of, okay, let's start a company and we'll come to governance later. But by the time we're ready to talk about governance, it's late. I mean, I have very many clients who have lost a lot of money, lost their businesses because they didn't have a proper structure. So we need, in structuring platforms of this kind, to develop good corporate governance frameworks. I mean, Tosi talked about liabilities for directors, for trustees. One of the ways to assist directors and trustees to limit their liabilities or even avoid is to have a proper governance framework. And if you have a proper governance framework, properly drafted, you will have internal mechanisms that will help to build on the checks and balances. Because you are using people's money. And for trustees, it's even worse, the liabilities that they bear. So it's important to also discuss governance. It's not enough to talk about cash flow, talk about asset allocation. These are very important issues. But it's also important to talk about governance, build a corporate governance framework, and then domicile the entire system within this framework to ensure that the business does not fail. That's the whole essence of doing this. What are we looking for? To make a profit and maximize the wealth of the owners. We will not do that if we don't have a very good corporate governance framework. Thank you.
Thank you very much. I mean, there's another dimension that, although that's part of the book, Corporate Governance Structuring of Reit. And incidentally, I remember those days when GT Bank was going to launch out. Mr. Midget, well done. Well done, you have worked. It was, like I said, the foremost corporate secretary of secretary and what do you call him now? Legal advisor and secretary of GT Bank at those initial time. And you could see the rate and the way they had to corporate structure. I mean, that's why probably I would say that GT Bank pays very well when it comes to dividends, because the corporate structure and the corporate governance structure was well put in place. And what have you. So that's so good. Well, let me call to the man from the capital market. That's again. From the capital market, you said something about the failure rate of the offerings or those who are coming in. Is it not about the fact that even in the capital market, there is no trust, as it were, or there is no confidence in the rate system? Is it that just about is it that they don't, I mean, or the competence to, because if it's driven from that side also, maybe there could be some enabling regulations that would promote it more regulation-wise and help them to move forward. What do you think?
Well, there are a number of reasons why many of these REITs have failed when they go to the marketing stage. The very first one is simply the rate of return that is predictable from those instruments. So even if you have the right asset selection, corporate governance, everything else is perfect. You can't be given a cash yield that is much worse than the federal government. There's really no reason for anybody to buy your instrument, and that's the end of it. I mean, so that's step one. And again, if you look at other markets, US market particularly, 10-year notes is yielding 1.55%. Most REITs are paying more than that in cash distributions, and that excludes capital gains. So that's one problem. Second problem is that historically, at least the ones I've seen that have failed, the assets have been, put it mildly, questionable. Questionable from both the valuations, both the stability of the rental yield, and both the underlying title. You can't bring a property with a long lease and ask people to invest in it. Nobody wants that really, because at the end of the day, it's a glorified rental, and the ability to appreciate is very limited. So you do have a lot of asset quality problems also, but I'll say the number one is just the rate of interest in this environment is just very high, and the properties are just overpriced. You can't have a situation where long-term federal government yield is about 15%, and then you want me to invest in your asset that yields only 7%. I mean, why would I do that? So that's the root problem. Everything else is all nice to have, but that's the root problem why these things don't sell. Thank you.
That's deep. That's a mismatch. I mean, so Akim, you're going to contribute to that, but those of us who are online who want to be part, just raise up your hand if you just raise your hand, and I mean the video will be on, and then you can be a part of it. So you want to say something? Okay. So on the note of that, because you can hear how deep that is. Maybe there's where there's a mismatch. Your expectations are not meeting the reality on grounds. I mean, you're an investor, basically, and you want to get back your own money somewhat. So what I want to ask for those of us who are still in the house, please, so what do we do? I don't know if there's another person who is also a capital market operator here who can say what do we do. Yes, we have had the problem now. What do we throw forward to make it happen so that it can be worthwhile? I don't think whether it was Tosin that said it or whether it was Mr. Smiley that said it, about the fact that why do we need to be saying you are the owner of the tall building? I mean, you won't take it away, but if you say you share space in that building and it's giving you good cash, I mean, good returns in your pocket, why not? But why do we? Yes, sir. Go ahead.
Okay, thank you. I mean, since this is a family meeting and I'm a member of a family, I think I can just make one or two contributions. I think the point made by Eggy is very valid. I mean, this is a conversation that we've had many times in our offices. We've had over coffee, in terms of the risk around the return from real estate, and this is not just REITs. This is real estate generally, because we must understand that there's a fundamental problem with the structure of our economy. Once we begin from that premise, there's a fundamental structure, a structure where yield on government bonds went as high as 18, 19%. I think it was in 2017, went as high as 17, 18, 19%. All other asset classes, you just can't compete. And this is not just about REITs. It's not about REITs. It's about all other asset classes. When we realize that instruments are priced off the back of MPR, once MPR is 14%, everything else falls. Falls down, as they always say. I'm a real estate person in and out, and I always like to focus on the argument for real estate investment, because incidentally, I've been on road shows, sitting before the likes of Eggy. I mean, I've done like 5 road shows, done investor presentations and things like that. You have to find alternative justification for your real estate investment. You could pitch diversity, because at the end of the day, investors will not put all their money in government bonds. So one of the most potent arguments that we put forward is that this helps you to diversify your portfolio. And for somebody who wants to diversify its portfolio, you will not worry too much. Once you have gotten your free yield from federal government bonds and the like, if you get a lower interest or yield from real estate, you won't worry too much. The other point to mention, and this is also very important, and Tosin captured that point so succinctly, is the fact that creating instruments like this will sometimes require you to think out of the box. In fact, when we did the REIT that we're talking about, we did not only think out of the box, we actually broke the box. We broke the box and we created a structure which was completely outside of the rules. But that was the only structure that could work. And then we now took our structure to the regulators. That we have looked at the rules. Based on these rules, there's no way you could create an asset, and this asset class, and deliver any return to your investors. But we think this could work. And it's to the credit of SEC, that they never said no. They didn't say yes initially as well. But we went back and forth, and we met ourselves midway, and we created what is now known as DOT, Real Estate Investment Trust. But it was a lot of heavy hand holding, like Tosin said. We even had to do a brainstorm session overnight, with all the advisors. We had to have a structure that will work. But for me, part of the major bottlenecks, to floating a REIT has been removed by the Finance Act 2019. And that is the point that we need to stress. There will still be all the challenges, but before now, the fundamental problem has been the issue of tax. Because the tax authorities, they used to think that we are asking for tax waiver for REITs. No. A REIT is supposed to be a transparent, flow-through investment vehicle. And today, Section 6 and 9 of the Finance Act has captured that clearly by saying that dividends and rents are received by the entity on behalf of the owners. Because the REIT is based on the conduit. That has solved a whole lot of the problem. Because when you tax the distribution in the hand of the entity and you are taxing in the hand of the unit holders, it amounts to double tax. And that was the problem. So that has removed a whole, for me, that's like 70% of the problem in terms of creating and floating a REIT. It then now requires us to sit down, look at the framework, and look at those assets, that make sense, like Benga said, and then put them together. Incidentally, my president, there's a whole chapter in the book on structure and governance. Because of course I'm also a governance person. So even beyond the simple governance rules around REITs, I also have to bring issue of proper governance, relationship between the various organs, between the asset manager, trustee, the general meeting here. The two organs in the company is the general meeting and the board. But here there's the investment committee. What is that relationship? All those we have tried to put together. And I think that much as this conversation continues, once we understand that the legal framework is now such that you can create a transparent flow-through investment vehicle, which is what the Finance Act has done. I think a lot of the problems have been removed, and we just need to move forward. But it doesn't solve the problem of yield and return. Everybody is suffering. All the equities are suffering. A REIT is a quasi-equity instrument. So I will not pitch myself against treasury bills. I'll be pitching myself against equities on the stock market because it's a quasi-equity instrument. And once you look at, if you do that, you do a plan. Everybody is suffering. The whole economy is suffering. Before Nigeria was in an emergency ward, but we are now an ambulance case. That is the reality as far as the economy is concerned. And it cuts across, whether you're talking real estate, whether you're talking anything. It's just that a lot of the time, we don't like to really have conversations around our issues, which is what is wrong with the structure of the economy. Thank you very much.
Thank you very much. At this time, I didn't dare to take something because I've noticed that most times the MC don't usually know what's happening there while the munching is going on. So I needed to do my read to my own tummy too. I think you had, I don't know whether at this point in time anybody has questions to ask Akim directly so that we can just wrap up the way it is. Yeah. You have a question, Sam? Okay. Yeah. No. I want to speak to the issue as well. Why not?
Well, it's not a question, but just a contribution. Once again, Mr. Chairman, all protocol observed.
Your name, sir?
Gbadebo Ajayigbe, a legal practitioner. Our special guest, I want to ask, and the author, we all know that REIT, in the practical sense of it, cannot be used for social housing. And when you floated REIT at UPDC, it was not meant for social housing, but for commercial housing. If we also, the investors, if I'm a capital asset manager or portfolio manager or investment advisor, the first thing you'll be looking at is the yield. Anybody that is investing is looking at what will come out of it for me at the end of the day. Every day, thousands of people are migrating to Lagos. Housing is a bigger problem. There have been certain vehicles in the past that the government tried to use. In the early 90s, the then military government, they started with the private developer scheme. When they give some developers large piece of land, that was how HFP got VGC. They did not even pay for the land then. But the system was bastardized and it was stopped. Now the private developer scheme, you will even have to pay for the land. The issue of double taxation, the government will tax you, they will tax all the allottees. And we know that there's a housing deficit. You also mentioned it that how can the plumbers, the laborers, everybody, that the REIT is meant for the elite or the people in this gathering. How can REIT be applicable to social housing? I know that if we all put our thinking caps together, the government can use the housing cooperatives. Akim, you are wearing another cap. You are the chairman of LBIC. In the past, we all knew what Alhaji Jakonde did with that company. And now a lot of people are landlords today. As of today, we should not just be looking at just only the problems. We all know that there are problems. And REIT, if not properly structured, if we do not give greater yield, nobody will be ready to invest in it. And a lot of Nigerians, even those in diaspora, that are ready, willing to invest in some good instruments if they know, and if there is the government backing to it, if it can be properly structured. That's why I'm talking to you, Hakeem, because that's one thing, again, you can use in... no, it's in the government, you push it to him. Is it not Lagos State that owns FBIC? Yeah. You can easily get... It might not be the way you structure the one you did when you were at UPDC, but one that can be tailored to social housing. Even if it's for civil servants, if it's for people that are in government, you can use housing cooperatives and so many other professional groups. You go and meet them, members of the Institute of Estate Valuers, the NBA, people that you know that pay their taxes. It could be structured. So don't let us just limit REIT to the way it's practiced in South Africa. How can we make it applicable and work here in Nigeria? Thank you, sir.
Thank you very much. Thank you very much. You heard that. How do we make it socially relevant? Not just a class, as it were, Ikoyi, the VGCs, and the yes, you have some online participation. Yes. So how do we make it? And that's true. Have we thought about a REIT based on blockchain technology, which is independent of government policies? From yeah. I mean, what you just said is a food for thought, really. About
I mean,
yes, sir.
I mean, I can speak to that, because like Tosin said, the last chapter of the book looks at the future of REITs regulation, and one of the factors that will obviously drive regulation in the future is technology. Now, today, people talk of digitization and tokenization of assets. The foundation of tokenization is unitization. You have to unitize the value of the assets. And that is what a real estate investment trust does. The only thing is that now you have to create a digital equivalent. And I mean, that's part of my passion anyway, because there's no way you can play progressively into the future if you do not pay attention to the question of digitization. So today there are a lot of PropTech companies in Nigeria, but going into the future, we have to, and this is where regulators have a very major role to play. We've seen how long it took for the rules on crowdfunding to come, and when it came, I think the maximum amount you could raise is 100 million. That will not buy 2 plots of land in Lekki. So my conclusion was that this is not meant for real estate at all. But at the end of the day, we must understand that we have to be able to create a digital version of your physical asset, unitize the value, tokenize the asset, and sell tokens digitally. However, I also made the point in the book, because sometimes the cloud computing, the ICT, sometimes we get carried away. The point I made in the book is that if somebody invests in tokens of a digital asset, it is an expectation of returns. That return, the return will come from the optimal management of the physical assets. So that bridge, that linkage, we must always understand that linkage must be there. Because we buy tokens because you can trade tokens as frequently as you can. Ultimately, whoever is the last buyer is an expectation of projected returns. And the returns will not come from the tokens. The return will come from how optimally you are managing the physical asset. Once we understand that bridge, then we can begin to create the right platform for going into the future. Thank you.
So it's really possible that you can deploy technology to this perspective. That's the summary of what Kima said. It's very possible. So we need also look at that, because that's also a space for those of the young generation who can come into it. But basically, at the end of the day, it's about how astutely the management is done. I was going to address what Mr. Ajay was saying about social dimension of rates, which is not a bad offering at all. Because the other day I was trying to say that about 2 months ago, I understand the markets were closed because Jack Onde was being buried or so, and whatever. And I said, look, if they want to close for 2 days, they could do. Because why? This is a man that, even though he never knew me personally, in terms of the things he did and what have you, social housing, all those things. I mean, why can't we create such that environment again and then be able to seize the moment as well? Perhaps this is going to be a good one, and that's why I celebrate what you said about maybe from this room, a new thinking cap is put on so that we can move on with this. Thank you very much. Femi Akintunde, the MD of AlphaMid, is online. He wants to ask a question or contribute, and so wherever you are, okay, Femi, you're on. Please speak to the issue. Yeah. Yeah, volume. We can't hear you. Okay, Femi, can you unmute wherever you are? Maybe you're muted. Can you unmute yourself?
Oh, okay. Sorry.
Okay, that would. Okay.
First of all, I'd like to congratulate you again for the book that has been published. It will be definitely useful both and also the academia. My question is to I don't know who will answer it, because it cuts across different segments of the people on the forum today. We have people from the capital market here, and then we have real estate investors, developers as well. I would like us to differentiate between the values that are created, which the market is paying for through the share value. It was said not long ago that when the REITs that were listed, the 3 REITs that were listed that we have on the market today, came to the market, the value has dropped significantly compared to what it is now. In my opinion, we have the market price, which is being rewarded. That, to me, is more related to the operational and cost efficiency of managing the business on its own. But if you look at the value of the underlying asset on which this operational structure sits, for real estate is quite heavy. So the question is, if I buy a REIT, am I just buying into the operational efficiency of the business, or I'm also buying into the ownership of the asset on which it is being traded? Because that one has a longer term value. Like we say, that real estate asset will always appreciate. If that is the case, then it runs contrary to the dynamics of what you see in the marketplace, where the feeling of the market is what determines the price, not necessarily the fundamentals. So how do we, as operators or managers of REIT, able to make the value of the investment that goes into the real estate asset itself reflect in the true value in the market? Thank you.
I think first of all, these are 2 different, dynamics. So the carrying value of the price on the exchange does not necessarily reflect the value of the underlying assets, or even the value of the balance sheet of the entity that is carrying those assets. So let's use UPDC as a case in point. Because the market is not liquid, and those securities are not being traded frequently enough, then it's reflective on the value of the units of the REITs on the exchange. But that doesn't necessarily automatically translate to the fact that the underlying assets are depleting in value. So, I mean, I think that, there is a place for market making, just ensuring that, there is activity on those, instruments that would significantly impact, the price at which they are trading. But in terms of the underlying value of the assets and even their ability to pay returns to their investors, it may not necessarily automatically be impaired just because, the share value or the unit value is, impaired on the exchange.
I hear you. I mean, that's deep. Yes. Hey.
Yeah, thank you. I think it's important people understand how prices come about on the exchange. I think first of all, there are a number of concepts that are not actually true. I mean, at least in this market, we have lots of examples of real estate assets whose value drops over time. Land doesn't drop in value, but the property on top of the land routinely drops in value for a whole bunch of other reasons. But I think one thing that a lot of those REITs obviously are not very good at is investor relations. When you see the very large cap companies, they have quarterly investor calls with the market explaining their results. There's a lot of interaction with the market. That is not actually going on with these companies. There's also the issue of size. I mean, when your market cap is 10 billion, no pension fund is interested in buying your units. You're not going to have a lot of liquidity. So they need to be of a certain size for there to be interest from the people who really have the money to move the market. But I think fundamentally the challenge that many of these things have is that the quality of the underlying assets is not well known. And if it's well known, it's not well valued by the market. And again, the reality is that if you think the market is underpricing your units, sell some property and put cash on your books. Cash will always price at 1 for 1. Nobody's selling because they're carrying their assets at values that the market is not convinced is real, because if it was real, you just sell. So the fact you can't sell becomes secular. The market says you claim your asset is worth 10 billion. Sell it for 10 billion, put the cash on your books. You can't do that. Then they say, okay, we'll price it at 5 billion. Even at 5, you still can't sell it. So there's that dynamic of efficient markets that many of these instruments are not projecting the information the market needs, and maybe they don't have the information, that's why.
I like that. Information market needs, yes.
Yeah, I'm going to respond from a different angle. So I identified there were two issues, which is the real value of the underlying assets and the perceived value from the market. What we are looking at is a cash flow. The cash flow is not recognized, because I always wonder that the most secure investment is land. Land does not lose its location, it does not lose its presence, neither does it lose its value. So it has almost like a 50% assurance in the market, but that is not priced. Secondly, identifying the free funds. What is the projected income from this asset? The market, again, has not been able to identify that direction. One major challenge we have is that if, particularly in Nigeria, if I am pricing my income in Naira, I already have a challenge. Let me switch it to dollar. Where is that going? Where are the people queuing up? I'll agree with Ege here that says the market is not deep enough, and I agree with that totally. It is not deep enough. Let us expand it. Let us open it up so there are more assets that we can invest in, and then we have to value the cash flow. Let's value the rents. For the UPDC structure, let us look at the total income that is coming from that structure, and then let's capitalize it. Because if I invested in the land, the brick and mortar aspect alone, that I don't want income, I can track the value going up. The value is going to be retained. Once it is maintained properly, once it's efficient, and if the day you liquidate it, you decide to sell it and give me my income from that, that is an earning. You can even leave the rental proceeds from there, because that's another investment possibility. Just investing in the rental aspect and not in the brick and mortar itself. So there are means we can look at. But for Naira rent, we have major challenges, and I think that's what people are looking at, and that's what the market prices, that we don't see the income. There's a company we have valued recently, and I was incredibly amazed at the income that comes from that company. It outperforms It's a listed company. The rental income alone outperforms even the actual business. But it's not even recognized in the market. That price alone, the income alone, buys the company twice. The rental income. If they separated it, it will be a huge investment, but nobody has seen it. And we've not been able to translate that effectively. Because like I said, if I value the brick and mortar aspect of it, as I said, it might be 10 million. If I value the income might be depreciating based on challenges on monetary, on other things. And we now have the stockbrokers pricing it negatively. And that's why we have no movement in that respect.
Thank you very much. At this point, the author would like to contribute. So that as we're wrapping up, contribute. Then the Honorable Commissioner will make a remark, and then the Chairman will give a closing remark, and then so that we can be able to close up. But it's been quite a very engaging one, and I hope that we're not going to just drop our notes when we leave here. We're going to take it on and use it the way we ought to. Something is starting, a revolution is starting.
Okay, thank you very much. I am a member of Reit. Reit is the National Association of Real Estate Investment Trusts. That's the biggest, that's the voice of Reit globally. That's the global voice of Reit. One thing that Reit always stresses is that REITs are total return investments. You don't focus only on the yield. You must find a way of factoring the capital appreciation, if any, into the return. That is what gives the full picture of your REIT performance. That is why if you go to a website of Reit, before you read 2 lines, you'll see the fact that it is stressed that REITs are total return investment. Unfortunately, this market has no depth at all. I mean, it's not, to say that it is not very deep is just trying to sugarcoat it, you know. There are only 3 REITs in the market. Total market capitalization, I think, is about 40 billion or less than 40 billion. How much is that? You know, the reality of the matter is that, and that is the whole essence of all this advocacy. You know, we need to get people to understand how REITs are floated, how REITs are issued, the legal framework, and Tosin made the point. One of the greatest benefits of our legal framework is that if you look at SEC rules, it says you can structure your real estate investment schemes as REITs, REICOs, or any other structure that SEC may approve from time to time. That's a fantastic provision. I think that if you have a cooperative, you can structure it properly, you can go that route. If you don't know how to do it, come to me. If you have a limited partnership, you know, which is now been barred by the new Companies and Allied Matters Act, you know, I think that with the new provisions of the Finance Act, the major legal hurdles have been cleared of the way. And we're going to see, you know, a flurry of REITs. And of course, packaging, structuring, engagement are very critical. REITs are very shy. You know, we tried to form Nigerian REIT Association, it never worked. You can just go online and just Google SA, South Africa REIT Association. You can see the level of advocacy, even for the 36 or 40 members that are in that association. You know, this is a very significant asset class. It has the capacity and potential to move the economy. And I'm saying that with every sense. There are some statistics which I gave in the book about the contribution of REITs to some economies all over the world. The number of employment, the value of dividends, the investment in assets, and all those things. We need to, and let's not forget, we have 12.3 or 12.4 trillion sitting in pension funds. Pension funds cannot invest directly in real estate. They can only invest in real estate vehicles. These are the vehicles. And now I hear federal government has borrowed 6.5 trillion. Before they borrow everything, let us channel this fund into investment, no matter how low the yield, Let us channel them into investment that will give regularity, consistency, and certainty of cash flow into the future. That is the whole essence of this advocacy. Thank you very much.
Thank you very much. Honorable Commissioner.
Okay, thank you all very much. A lot of very deep discussions, I must say. As we wrap up, one thing I would like to say is that all of these regulations that flow into molding how these things go comes from government. And there are two ways of doing that, by either actively advocating for those changes to happen on a consistent basis, or being a part of government in one form or the other, right? And it's not easy to be a part of government, right? The second point I'd like to say is when we look at Lagos, one thing I've learned about governance, all right, is that it boils down to two things: the rule of law and taxes. How you use the rule of law to mold a society and how you use taxes to influence behavior, and especially in the real estate environment. Now, in the conversation we talked about facility managers, and what our experience is really is that once you develop a place, you set up the whole rules around facility managers, and when the people have acquired, they fight the facility managers and destroy the rules that were required. So you see places like 1004 in the heart of VI beginning to turn into a slum, right? And it is coming as a result of our sense of ownership, which means freedom. It means you no longer have responsibility for maintenance in our minds. Okay, Lagos is a very, very small space. Now, if you populate that small space with low-income people, then you destroy the place. In terms of revenue through GDP, Lagos probably is one of the lowest anywhere I've seen in the world. It's basically about between 2 and 3% of GDP. What that technically means is that the economic activity which GDP tends to measure will destroy the infrastructure because the revenues are far from what is required to sustain it. What that means is that, for developing environment, you need something around 14–15%. And it's not far-fetched because people like countries like Ghana or Egypt does attain that. And when you go to Joburg, and it begins to rise towards the 30%, meaning that Lagos needs about maybe 10 times what we earn today to cope with the economic activity that is upon it. When you look at this small space, just the argument of demand and supply means you need very high-earning people in this small space to be able to pay those kind of revenues to make this environment livable. You don't have social housing in Mayfair or Park Lane, for example, right? Now, when you say that, it feels cold, but the truth of the matter is that 2 years ago, you only had about 60 slums in Lagos. But when we did a survey about 6 months ago, we have 300. Lagos does not give out visas, and so you can't drive out people, right? But who do you think is coming into Lagos? Do you think it's the high-capacity people from other places? No, they're the people who can't define themselves in other places. So what do you need to do in Lagos? I was discussing with the Commissioner for Transport to say, look, how do we solve this problem? And he said, and it is true, you cannot outbuild traffic. You cannot, by building more infrastructure, solve the problem of traffic in Lagos, because you put in Ikoyi Link Bridge, your traffic time drops almost from 1 hour to 20 minutes, but not too long. Not too long after that, it is drowned up because of the amount of cars coming into Lagos that do not leave. To build the regional road, which we started, probably will take 2 years. And for a temporary moment, it will cause ease. But if we continue at this pace, it will drown it again, right? The trucks were doing a 6-lane rigid highway from Eleko down to Ekpe because the refinery is coming. But at some point, we will have to accept that Lagos must be an expensive space for it to be livable. And therefore, the people that should survive in this expensive place must be high productive people. And therefore, we need to look at things around fiscal planning rules. How many people can stay in a space, for example? And those rules begin to look harsh. We need to learn how to pay for infrastructure. We can't always continue the path of no tolls, for example, to keep the place on top. We generate over 70% of national VAT, but we get only about 8%. VAT is consumption. Consumption impacts on infrastructure. So it is unsustainable. It's just unsustainable the way the federation is organized and the way the fiscal configuration is organized. The other thing is that if you overcrowd the markets by bringing out government securities that price above the equities, then you will have this kind of funny behavior. Now, if you do not use taxes to fight corruption, then you will have people who pay 100,000 in taxes but are having 10 billion development in Ikoyi, right? So all of these are the issues that face us, and we do require understanding, and we require a lot of participation in, because you find out that the real voices that tend to turn this thing upside down are the voice of the elites as well. Right? The elites do not just, I mean, if you start to move on taxes, who will get affected is the elites, so they will fight it. Right? If you start to move on, I mean, it's the elites developing Banana Island the way they are and destroying the entire place. So when you fight, they fight back. So we need more minds in government. We need people who will participate in one form or the other in government to just get it going. We need a new understanding. Incidentally, the Southwest is built on a social governance system. So you have schools where what you pay to become a graduate in medicine is the same as what you pay even if it's history you are reading. But it can't be the same. It's not sustainable, right? And what that does is that it builds a culture in the way we just live and run ourselves that actually destroys and self-implodes. And I think that as leaders, we need to begin to make that shift if Lagos will move ahead. We are building rails, 2 rails we've committed though. We're able to do that because of pressure coming on the federal government to say, look, we have a pension fund, you have a cash reserve that is at 0%. Can we get these funds to do infrastructure on a long-term basis in a viable environment? And that is the only reason we can do the red line and the blue line, right, at interest rates of about 5% and 9%, right, long-term money, right, and then we'll do that. When that happens, 32 million people will be moved from Agbado and Okoko up to Marina, right, reducing their travel time by almost 50%. And then they can go out to find social housing at the periphery. Then you can build ring roads so that people don't always have to come in. Then you can take parking costs so that if you decide to bring your car into central Lagos, you will pay, right? And then you can take toll prices up so that, look, a developed environment, like this other leader said, is not a place where everybody can buy cars, but it's a place where even the rich use public transport. Then you can invest in public transport and make things work. My view is that any challenge that arises on the earth has its solution on the earth, and I believe with fora like this, if we put our minds together, we'll be able to crack it. But cracking it requires deep thinking, practical thinking, and not just thinking in the clouds. And I believe that the quality of minds we have here today can do it. Thank you.
Thank you very much. Like I said, this is an egghead being a technocrat. Thank you very much, Honorable Commissioner. Very clear insight, very, very clear insight. I share your report, I share your views, sir. We have some people have been watching, have been part of it online, and there's a report here. Somebody said, look, this is a report from PwC on the power of the diaspora. Over $29 billion was remitted to Nigeria from Nigerians in diaspora, and 30% of these remittances is for real estate investment. How do we take advantage of this pool of funds into the country? I propose an easy, secured, and transparent platform where our people in diaspora and international investors can invest or buy properties from sellers and developers in Nigeria. Blockchain will play a vital role for this, because it will create some level of trust and entice foreign investors. This is part of solution people are proposing. But bottom line is that we must move this bit forward. We must move these people. On this note, I welcome the chairman as he gives his opening remarks, his closing remarks. Thank you very much. Thank you very much.
Honestly, I came into this hall as a primary school leaver, and I thank God I am leaving this place now as a PhD guy in Reit. So thanks to the organizer of this event. But let me just equip a small information that I'm sure most people don't know. This kind of forum we have today has a way of changing the country. And I only cite one example that will baffle you. If I ask any one of you today to tell us the origin, how the monetization policy of our government of Nigeria arose some 20 years ago, probably nobody wants to know. Not to waste your time, it was a lunch conversation between my humble self and somebody very powerful in government. I only give an example. I say, sir, my office is next door to 1004. More than 70% of the so-called residents of 1004 were not civil servants. The government didn't know. When the government had that in Abuja, of course, you know the man was there. He went turbulent. He said, I want fact, I want data. So they came out to my office, and we conducted a very small scale something to let the government know that all the civil servants you said you put in 1004 who had moved to Abuja have sublet. And through that, not to waste your time, I know I'm saying this to all of us. They came back to my office and they appointed 3 firms to make a survey of all federal government assets in Lagos and their tenancy status. They appointed my firm, Gesh Ensho & Co., and a man called, of blessed memory, Shunaike & Co. But the bottom line then was, after a report like that, they then said, okay, you had a choice. You can collect your housing allowances and go and find where we're going to build. Because we're having a crisis. A guy was a civil servant, had lived in Ikoyi for about 30 years, had about 4 children, retired, brought up about 4 children, all in Ikoyi. And the only place you could afford to buy a house is Akute, Meiran, and so on and so forth. You could see the internal rebellion between parents and family. I raise this issue to let us know one thing. When you see some individual sparing their time to write such a book and sparing time to bring people who would not know who is going to become tomorrow, the next president of Nigeria, the next, Minister for Finance or Housing, and so on and so forth, or as we have today, what impact this forum will have on the mind of the Commissioner for Budget and Planning. Because as I said earlier on, where there is no knowledge, people perish. But the few comments I would like to make, having said that generic comment, is simply this. Number one, let us face reality. What my Honorable Commissioner has said, I agree with him to some extent about the challenges that Lagos State government is going through and about the effort they are making. But let us call a spade a spade. For as long as there is a real and complete disconnect between state government and the federal government, particularly a state that is the financial capital of your country, no matter what we do, we just moving back every day. Because if you look at slum will clear out if you have a robust infrastructure that I don't have to stay in Lagos. Myself and my wife now can live in Ibadan. Under 35 minutes, we're in Lagos. I work and I go back. So who's going to have that infrastructure? And as I said earlier on, the moment you finish that Lagos-Ibadan Express Road and Sagma Expressway like that, give it 5 years, it's overcrowded. It's a real thing. You look at what we have avoided so far now is that try and categorize population growth in Nigeria. Drivers, bricklayers, anybody still keep on having about 2 or 3 wives and 4 children per wife. And if any of the wife does not have a male child, it's okay, I'm going to 8. So you see this, you can plot it. It's only when you have a nation like a country that are so data averse, then you have a problem. Number 2, I want to let us bear in mind is this. We are having a small lecture here now on a topic that's too germane to our growth. Because it is not when a government focus on the oil industry, focus on the banking sector, and neglect, no matter how small a sector is, that can make a growth. I sent some document to my children about a week ago when I ran into how these fintech guys, young guys, in fact, 2 of them came to my office. About 3 days ago, one of them now is making $1 billion on, what do you call it, WhatsApp. So when a government is serious enough, you bring everybody into your governance structure. So my own position concerning that is that you have a government that is driven by consumption and not a government that is investment driven. The only thing we can then do as far as this is concerned is that let the conversation go on. When it goes on, someday, some people that matter will act on it, and all these problems we are discussing all will be a thing of the past. Nigeria is a formidable country in Africa, and of course, formidable country potentially in the entire world. Once again, I thank the organizer, I thank the author and his wife, and I thank all of us for coming to this event. God bless you all.
Thank you very much. Wonderful, wonderful. Thank you very much. At this point in time, I would like to call the publisher, the author to come out. Meanwhile, we're going to have pictures taken. Please, everybody in this room will have to take a picture with the author. But we'll come in segments, So right now, it's for the people on this side. The second point, sir, please join in. Yeah. For those who want to sign the books, if you bought your book and you want to have it personal autograph by the author, he will be sitting at the back there. You can just go there and have it signed. You can pick your books. Yeah, please. The next round. Thank you very much. Please, let's join him. Please, let's join. Ogaju.
For you and me, be my Juliet and I'll be your Romeo, my love. It's the hand of God, now him bring you to me. It's indescribable what you mean to me. Would you be my Juliet and I'll be your Romeo?
Let's move in. Like I said, got the book.
Would you be my Juliet and I'll be?
Thank you. Please, the next round of label.
This live stream is brought to you by Virtual Events Limited, Africa's leading virtual event streaming company. For bookings, call +234 909 807 9830. Email hello@virtualevents.ng. Visit our website at www.virtualevents.ng.
You'll be my Juliet and I'll be your Romeo. Oh, my love. Oh, my love. I don't know when I'm coming back. I'll be gone for a little while, but I will keep myself for me and you. I'll be back for you. I don't know what the future brings, but I want you to be with me. I could hope and pray to make you wait for me, 'cause I'll come back for you. Darling, you hold my love, you are my praise, and I'll run to the finish line. My love, I don't go leave you, run. I don't go bounce your call. You'll be always on my mind. Yeah, yeah. I'll be so far away. Promise you'll wait for me. I could think of you every day, my love. Yeah, yeah. I may not come today, but I'll be with you again. I could pray for you every day, my love. Yeah, yeah. As I'm leaving you behind, I'm gonna miss your smile and the joy you bring to my wretched soul. Your love, it